Test if they opened. Okay, today hello everyone. I don't know what they have opened. Basic variance or something they have opened. This is not what we are doing today. We are doing revision today. Paper you all in attempt section C. No time.
Some reasons I didn't find my time. So my grandfather was passed away before the time.
Ah, okay. So you came after that also.
No, I
Did from home.
Yeah.
Ah, that's what. Okay. So you all are not done. Even your friend he also have not done section C.
He also with me.
He also
My
with you.
grandfather hospitalized before last we had on Tuesday.
Yeah, that day.
After Wednesday he hospitalized.
Allah.
After that I was I
You were with him? Ah, right, okay. So couldn't study that week must be, no? Okay. Last week we did ABC costing, target costing, life cycle. Today we do throughput.
But I see the paper once again because
Yeah, that's what you have not done. Now we had to give them review. No, very difficult. I don't know. I gave your names, but I told. Why is not getting typed? It's not getting typed. Bluetooth keyboard. Apple. It's connected. It's not getting typed. Come, Shakil, no? Now I know. You're Abdurrahman. Now classes will change. Remember. Shafi is not there. Today my daughter is sick. I couldn't. She was not letting me leave. That's why I got late. Somehow put her to sleep and then left. Okay, we are starting with throughput accounting. We're starting with throughput accounting and we're just going to do the revision and then we do questions from that, okay? What is throughput accounting? Throughput accounting, you know that we are using in a just-in-time environment, right? When what do you say? What? When there is a bottleneck resource and when we want to, what do you say? Maximize our contribution when there is bottleneck, okay? Throughput, how do you calculate? Sales minus only the material cost. We don't take any other direct labor, nothing. We assume that only material cost is variable. All the other costs are fixed, right? So it's different to traditional costing. With throughput, whenever one bottleneck we elevate and make it better, always there will be another bottleneck. So this process will keep on repeating. You all know, you all can be asked to calculate the throughput accounting ratio. To calculate that, you have to first find throughput return per factory hour. For that, if one product, you just take throughput per unit, divide by products time on bottleneck. If it's more than one product, we have to take total throughput, divide by total bottleneck hours available. That is to find return per factory hour. How do you find cost per factory hour? Any situation, same formula. Total factory cost, divide by total bottleneck hours. Then both the answers you have to take and put together, the return divide by the cost. If the return is greater, it will be greater than 1, it will be 1 point something or 2 or something like that. If the cost is greater, it will be 0 point something. Okay, if throughput is greater than 1, it means the return is greater than the operating cost. If throughput is lesser than 1, it means return is not sufficient to cover the cost. Okay. If there is a multi-product situation and they ask you, how do we optimize the contribution, right? Despite this limiting factor, then we have to follow 5 steps. Step number 1, identify the bottleneck. Then step number 2, calculate the throughput per unit, selling price minus material cost. Step number 3, calculate throughput per bottleneck resource. Step number 4, based on that you do the ranking and then you calculate the optimum plan. Okay, where was I going? It was yeah, I had to take the log into this. So we are going to do some questions. Shafi, you couldn't do the section C? Are they asking for the touch? I can't log into this now. Dasha was there, no? She was there, no? Ashra, I can't log into this my ACCA. It's asking for the assistive touch.
Oh, okay.
To do the questions. Touch ID is asking.
Yeah.
Oh, okay. Okay, no, I don't.
Yeah.
I tried to do
Yeah, no, miss. Anyway, you will have to call me because to put the you know the password.
No, I don't know the password. Generally just log in like that.
No, fine, no, miss.
No, okay, yeah. Okay, thank you. Right. Alright. So throughput accounting question we are going to start with, right? Section A and B, what you did, you have passed, Shafi, but without section C, I can't give them a word. The institute wanted, none of you have done section C. Only one question you all have done in section C. Do all 3 questions. What? Yeah, no, I'm saying only based on that. If I see you have passed, not out of 100, then it's very less. I marked all the 3 papers. I spoke to them, I did not send it to you all. Someone had asked, are you going to discuss this? Yamco we have done, no? This pressing, stretching. We have done that. We did, right? Yamco, check and see. I roughly remember like it's been done. If no one also we did that's ACCA custom. With the custom also we did. See whether we have done Yamco under throughput accounting? No. Then let's do that. Yamco involved in the processing of sheet metal into product A, B and C using 3 processes: pressing, stretching and rolling. Information about the 3 products per meter are as follows: A, B, C, selling price 70, 60, 70, variable cost material 3, 2.5, 10, labor 10, 10, 15. Other factory costs are all fixed and total 17,975,000 per year. Raw material for the sheet metal is first pressed, then stretched and finally rolled. The factory manager has provided the following data. Product A, pressing time 0.5 hours per meter, 0.5 hours per meter for B also, C 0.4 hours. There are 225,000 hours of pressing time available each year. That means how many meters can we press? 225,000 hours of pressing time available each year. For all three. For product A, B, C, for everything we have 225,000 pressing time. This has been identified as the limiting factor. Maximum demand for each product is 200,000 meters per year. Yamco employs 700,000 labor hours per year, which is sufficient to meet maximum demand. Labor is paid at 10 per hour due to agreements with the union. Yamco is committed to paying this amount of labor in full. How many meters of each product should be made per year in order to maximize contribution per hour of pressing time? Are they asking step number 5, the optimum production plan? No? So we have to go do 5 steps. This is not working, no, I don't know why. Now when Dashtra comes, it will work, see. I don't know why. Dashtra, this keyboard I'm trying to connect, it's not getting connected, no. Is it the basis keyboard? Keyboard and another thing.
I'll get you another keyboard.
Okay, I'll just try to do that. Or we'll just continue, students. Okay. We have to type on this. This there's a keyboard. No, that's also not. This one keyboard will come. No? I think this one is I'll sign in.
This throughput account, right?
Yes. We're just having a few technical problems.
It is too late to submit the paper, no?
Yeah, but it's okay. Just do it and.
I did it yesterday.
You did it yesterday.
Yeah, trying to find the file.
Send it to me. It's okay. I'll mark it anyways. Just to see like. Tasha, to your email, I have sent a code that is to sign into the Microsoft. Yeah, I will stay. Yeah, tell me the code. One moment. 154 050 Let me see. Wait a minute. I need to sign into this Word, Excel. Sorry. Okay. It's okay. Right. EMCO. So we have to follow 5 steps. What is step number 1? Identify the throughput that they have already given. Sorry, bottleneck. They said pressing time is the bottleneck. Step number 2. Calculate the throughput. What are the 3 products? Product A, product B, product C. Selling price minus the material cost, right?
That's the throughput contribution.
Yeah, we have to calculate the throughput. Selling price 70, 60.
Section E or section C or section B?
This is YAMCO. No, it's from the study hub, so it might be slightly altered. But YAMCO is there in the book. It's there in section C of the book. But now this question here is altered slightly to make it, because this will not come in section C,
Yeah.
So they have changed that section C question to a section B question. How is working and studying going for you two? Managing. Can manage. So I will start at both of you.
I started.
You started. What about you? Started.
For transfer pricing, what are the key areas I have to keep in mind there?
Transfer pricing, key areas. You have to know that at what situations, how do they decide the transfer price? Like certain situations they will go with the market price. Certain situations they will go with the variable cost. So you have to know those things. After that, what's step number 3?
Throughput by limiting factor.
Throughput by limiting factor. all you can do with me. Throughput for limiting factor. Very difficult without that keyboard. Throughput divided by bottleneck hours. What are the bottleneck hours? Pressing time, no? Pressing hours per meter. Oh, they are given pressing hour per meter. This is the throughput per meter. No, so it's okay.
And can they test maximax, min-max period this time?
Yeah, can. Good chance. Step number 4, ranking. What's the ranking? 1, 2, 3. Okay, so what is one? Now stop. Now listen. No? First one is what? Product A. Listen, now stop. So now stop. What's the first ranking for? Product A. So they have to make demand for 200,000 each product. So product A. What is the amount of pressing time available? 2 to 5. This many hours. Okay. So now first we will make product A. We'll try to make maximum all the 200,000. Okay. So 200,000 units into meters. Sorry. Into how many hours per meter? 0.5. So here itself 100,000 done, correct?
Ranking is wrong.
Why rank is done?
Yeah. 60 divided by 0.4.
So this is 1, no? Okay, that means we are making product C first, correct?
Yes.
Multiply by 0.80,000. No? Then after that we will make A. 200,000. To 0.5. Then how many hours balance? So in this we have to make product B. So 45,000 divided by 0.5. How many units can we make then? 90,000. Okay. So 200, 200, C 200, A 200, B. How to put the answer? Yeah, but I can't. Select your answer using the rectangular button. Can't put the answer now. Yeah, rectangular button. Do you know where I can put the answer? Nothing is getting pressed. Can't answer that. Remember that answer is C, no? This one you can. Okay. The previous one only you can't select the answer. But it's C, yeah? Can I copy it down? Okay. Finished? Next one. Match each product to the order in which it should be manufactured to ensure that contribution is maximized. What do you produce first? Ranking they are asking.
Yes,
Produce first C. Then A. Then A. Next one. The throughput return per factory hour for product C has been calculated as 150. Return per factory hour. What is the throughput accounting ratio? For that we have to find also what? The cost per factory hour. Still they didn't bring the keyboard, no. Very difficult to type without the keyboard. Cost per factory hour. How do you take that? Total factory cost. How much is that? Labor cost. Only labor cost, no? No. Other factory costs are all fixed. But that doesn't include labor cost, no? We have to include labor cost. Total. They have given like this. Material, labor they have given on top. After that they have said other factory costs are all fixed. So that doesn't include the labor, no? Other factory costs are all fixed and total. Yamco employs 700,000 labor hours is sufficient maximum labor is paid 10 per hour due to agreement. No, they have not included because they have said other, no. On top they have given no material and labor. That means labor not included. We have to include labor. So total factory cost will be 17,975,000 plus Yamco employs 700,000 labor hours and pays at what? 10 per hour, meaning 700,000 into 10 is another one more zero. We have to add 7 million. Okay, so add this together now. 17,975,000 plus 7 million. 1, 2, 3 equals. Divide that by the total bottleneck hours. What's the total bottleneck hours? 225,000. So how much it's coming? 111. So what is the return per factory hour? 150. So throughput accounting ratio will be return per factory hour 150 divided by cost per factory hour 111. 1 to 2 decimal places. 1.35. Okay, copy that fast. We started our batch in April, right?
Yeah.
Done? Yamco also makes a fourth product D. Product D has a throughput accounting ratio of less than 1. That means what? The cost is greater. And the management accountant has stated that under no circumstance should D be made. Are each of the following statements regarding ceasing production of D true or false? So what is happening in D? What's happening in D here? D is having a higher cost than return, but it is having a return. Correct? It's having a return. Many of the fixed costs relating to D may not be avoided even if production is ceased. Many of the fixed costs relating to product D may not be avoided. If it is relating to product D, then it can be avoided, right? Why don't you all tell me? Many of the fixed costs relating to product D. So meaning relating to product D, meaning it's specific fixed cost. May not be avoided even if production is seized.
True.
Many all are saying may not be avoided. Demand for other products may be adversely affected by ceasing production of D. Like if you close down D, other products also demand might fall. The throughput accounting ratio of D could be improved by increasing the time spent on the bottleneck. If you increase the time spent on the bottleneck, it will worsen or improve.
Versus
It will worsen. So this is what?
false.
It may be possible to increase the selling price of D and this could increase the throughput accounting ratio. Okay. What happened about that? We didn't check the answer for that. Let's do this also and check the answer. Indicate by selecting the relevant box in the table below whether each of the following statements about the theory of constraint is true or false. It is essential that idle time on bottleneck is minimized. It is essential that labor idle time on bottleneck, It is essential that labor idle time on non-bottleneck resource is minimized.
False.
Non-bottleneck meaning it's not that important. So is it essential to reduce idle time on that? No, it's more important to reduce idle time on the critical resources. Throughput is maximized by reducing the impact of bottlenecks. Wait, the answer before this, why didn't it come? Maybe we didn't answer it. So we have not, we said true, false, no, true, false, true. Why isn't that? Correct. Okay. So many of the fixed costs relating to D may not be avoided even if it's key. So many of the fixed costs they are saying some will still be happening. Right? We can't avoid it. Right. With environmental accounting, what are the things we have done? We spoke about environmental management accounting where you include environmental costs, right? So we also spoke about achieving environmental benefits. That means when you take environmental costs into consideration, right, you will better understand those costs, so you will better manage those costs. Then you will try and reduce your wastage, or you will try to save energy. You will try, like when you are measuring it, it will get done. Like when you know that okay, these are the environmental costs, you identified or you search for it, so then there is more chance that you find them. Otherwise, it will more likely that you will ignore this cost. So there are two types of environmental costs: internal and external. Internal meaning what the company is capitalizing, and we are directly paying for it. External cost, some other party is paying for it, so we are not understanding that cost fully, right? So with environmental cost, there are 4 different kinds of cost: conventional cost, Cost of buying the energy, the cost that we are paying to buy the energy and the scarce resources. Hidden costs, these are recorded but they are hidden in the general overheads. Right? We do not directly know that this is related to the environment. It's hidden somewhere in the general overheads. Contingent cost, meaning because of today's action, in the future we have to pay a liability. Contingent meaning what? Due to something we have done today. Maybe we have cut down some trees. Maybe we have done some harm to the environment. Maybe we have emitted, too much of gas. Or maybe we have emitted our waste into a river. Or maybe we have emitted our waste into some other drainage lines and people living in houses have got affected. Something like that. So what we are doing now, in the future, it's going to become a big liability for us. We have to pay a tax, we have to pay a fine, something like that. Image and relationship cost, because if when we do harm to the environment, our company image, our business image will also get impacted. Categories of environmental costs, there are 4. Environmental prevention cost, that means in order to prevent something from happening, the steps we are taking, and for that the cost we are incurring. Detection meaning we are trying to monitor and see, is something going wrong, is something going wrong. We are trying to scan, we are trying to monitor, we are trying to do some testing and see if something is going wrong. We are trying to detect, that is a detection cost. Environmental internal failure cost, meaning failures happened. Internal meaning that failure is still within our company, we have not still sent it out. So failure has happened but it's still inside, and how do we correct it, and the cost we incur to correct it. External failure cost, meaning failure has happened and the items have left outside. So now the repercussion damage is greater for us, right? So prevention and detection, before things happen we are trying to identify and stop it from happening. Failure cost is after it has happened. External failure is more serious. Prevention and detection are cost of compliance, cost of making sure things are happening properly. External internal failure is non-compliance. We have not complied by the rules and regulations, so we have failed. Non-compliance, we have not complied. So due to that, what are the damages we are going to pay now? That is internal external failure. Cost of non-compliance it's called. Environmental costing, we can use it even using ABC costing, right? We can see like what is the environmental cost per unit, right? And we can try to reduce that. The management accounting technique, here we measure the inputs and we see with the outputs, and we see, okay, 100% we have input material, 80% is only there in the output. Where did that 20% go? It would have got discarded and gone back to the environment in terms of waste. So we are trying to monitor like that. We are seeing what are the inputs we put, how much have come in the output, then where did the rest go? Can you understand? We are measuring the input to output. So here see input 100%, 60% have gone to the product. 20% have gone for scrap, we have sold for recycling. 15% we have disposed. 5% we don't know what happened for. Saw that? Then flow cost accounting is, you are seeing the environment costing in 3 flows. First, when you are purchasing the material, what was your cost? Second, when you are putting it into the system and delivering it, what is your cost? Third, when you are disposing it, what is the cost? In 3 stages you will set. Activity based costing is, you are taking environmental cost drivers and trying to manage it. Life cycle costing means the entire environmental cost that you are going to incur in your entire life cycle, you are trying to estimate and see. Right? So what are the environmental costs? Waste and effluent disposal, water consumption, energy, transport, travel, consuming raw materials, all that is causing environmental damage. Today what is happening is there are so many fast moving goods, no? Like what do you call that? The products today are fast moving consumer goods, right? Because of that, like every 2 weeks, like when you take the fashion industry, every 2 weeks, every 1 week, new designs are being introduced, right? Every like 1-2 weeks they are putting out new designs, or maybe every 1 month they are putting out new designs. That is what they are trying to encourage us to buy more than we need. Can you see that? So what is happening with all of that? When we purchase more than our needs, it's taking too much out of the environment, right? Many years back we would have not had such a big collection of clothes, but today it's available, right? It's not, it's there everywhere and you see it everywhere. Marketing is not just clothes, everything. We are just overly consuming goods today. That's a problem, and that is also impacting environment in so many ways, because where are we taking these resources from? It's coming from the environment. Mainly it's because of this fast manufacturing that is happening in countries like China, in countries like, mostly in China, they are doing fast manufacturing at very reasonable prices. So everyone can kind of afford it. Sri Lanka is a different situation because of our taxes, very high taxes. So when we are getting goods here, it's extremely expensive. right? For us it's expensive here, right? But most of the other countries it's very, like if you take India and all, it's not very expensive. They can consume so much more because of that. How should environmental information be reported? So you can put in an environmental report and periodically report on it, or you can report on it once in a way. And also, so nowadays this environmental and sustainability. What is sustainability? Carrying out our operations in such a way that the future also has things remaining for them, keeping back for the future generations. But at the rate that we are going at, maybe it's going very, now these generations that's coming up, we are consuming too much, so we don't know what's going to happen in the next decade, or then maybe they will find new ways. That's what we can say, because with technology that should be possible. How to regrow and all of that, they will regenerate and things like that, recycle, and they might again, if vehicles are not running with fuel, they'll find something else probably, right? Sustainability, meeting the needs of present without compromising the ability of future generations to meet their own needs. So that is about taking sustainability. This IR framework, sustainable value creation, relies on a broad set of inputs, different kind of capitals: financial capital, money, manufactured capital, capital that man has made, intellectual capital, our brain and knowledge, right, what we are putting in, human capital, the human people who are working, the laborers, social and relationships, our our networking skills, right, all of that, natural, meaning what we are taking from the environment. All of this you are putting in, and those are your inputs. You're in the business process, you're converting it, and it's coming out as outputs. What are the outputs? Positive and negative over the short and medium long term. Even outputs will be in terms of finance, manufactured, intellectual, human, social and relationship, and natural. Sustainability strategy perception. You are trying to, in order to be sustainable, you are trying to create value. How is value created over time given the capitals, resources and relationships we have? Stakeholder perspective. How do business activities affect and are affected by society? Customer needs. How are the customer needs and preferences changing in today's world? Megatrends affecting organizations. How do megatrends present risk and opportunities for the businesses? Because nowadays, within a year at least 3-4 different trends come in, right? It keeps changing, and then how does that affect the businesses? It will decide which businesses are doing well, which businesses are not doing that well. In today's time, what are the businesses you think are doing very well? What are the businesses that can flourish or do very well? I think most of the businesses can do well, but what's the most, services? Yeah, definitely more than manufactured goods. Services are actually, you can sell it at higher prices. In terms of what kind of services are doing well, what do you think? Like,
Education is doing well.
okay, what else? Shall we see?
And nowadays, digital industry is doing well.
Digital industry is doing well, especially like marketing on what do you say? AI related, not only just marketing, not AI related, like marketing itself, social media adverts, those things are doing it. Services, performing. What are the goods you think are moving fast? Let's first check. You all said, what are the services you all said?
Digital industries.
Oh no, 2025. Mostly these digital based industries. They have said 2025 several services are expected to perform well. Key areas: technology, IT services mostly, professional high-tech enabled services, financial, healthcare, and cybersecurity services. Managed IT, cybersecurity, data and information. Outsourcing services, banking, capital market, wealth management, risk and banking and capital markets are also doing well, like when people are investing and things like that, in the stock markets. Telehealth services, that is remote patient care, like we have ODoc and all. Have you heard? No, we have ODoc, remote patient care and virtual consultations. They're saying they will become common because people are trying to save time at all times. So we do not have time to even go to the doctor now. Healthcare consulting, navigating complex regulatory landscapes in technologies. So e-commerce, education is doing well, especially online learning, test preparation, professional upskilling. These are the key trends this year have been AI automation. Definitely AI was introduced this year. Then they're thinking of sustainability at all times because of that rapid increase in commercial and consumer goods, globalization and data-driven decision making. What are the top performing trading businesses? What do you all think? Can you guess? Or commodity, what do we say? Best commodities. Definitely oil, copper, those things are doing good. But consumer goods. No, this is not giving the answer. What are the e-commerce businesses performing? Most of these are. I don't think they're showing me what I'm looking for. Probably I'm not googling it correctly. I think most of these e-commerce businesses have to now use social media, to promote and things like that. Those have become the trends. But wait, what I'm looking for is not that. I'll come to that later. Where were we? I'm looking for the fast-moving consumer goods, I think. Right, so we looked at sustainability, then role of accountants. Okay, so what do accountants have to do in order to make sure that the businesses they are working in are performing in a sustainable manner? First, you have to identify and connect with the new trends and impacts, right? Then you have to integrate significant natural and social capital issues into management information. So you have to identify what are the natural capitals we are using, what are the social capitals we are using, and you have to make investment decisions with that. Like, for example, what are the natural capital that we are going to invest in? Like, how much are we going to spend on that? We have to use our social networking skills to find out the different places that these resources can be obtained from. Right? Assess the benefits of responding to environment and social matters. The accountant has a responsibility to see if we respond to these environmental factors and if we carry out our business in a sustainable manner, what is the financial benefit our company will get? If we do not do it, what's the loss we are going to face? These are the things the accountant has to calculate. Right? And he has to organize the system, processes and people to support decision making. Now, these areas are new. Right, so you have a chance of getting questions from it. That's why I'm going in little detail. Linked to value creation, the accountant has to see, okay, so to ensure resources are used effectively in creating value for shareholders, customers and other stakeholders. Now once the accountant has identified the natural resources, the human capital, okay, and everything, he has to identify how are we going to use this in the best way so that our shareholders or stakeholders are given the maximum return. Drive efficiency by reducing wastage and lowering the cost. Because when he does that, automatically the environment is also protected in several ways. Provide credibility to data and information through effective governance and oversight. Right? Provide the data and information. Communicate clearly to facilitate transparency through stakeholder communication and disclosure supported by appropriate reporting frameworks. So the accountant has to have a role in leadership and business strategy, management, operation and accounting, and communication, reporting and disclosure. In terms of sustainability, these are his roles. You will generally get a theory MCQ question on these areas, right? Let's look for questions. I roughly went through that. I think I was looking for fast moving consumer goods. Do people use Google now or do they use ChatGPT? ChatGPT, no? So now Google is also becoming outdated. See, Google is not giving my answers also. Oh, this has got signed out again. Ask ChatGPT that question. It's not working again. Fast moving consumer goods performing well in 2025. Google was not giving my answer. Google was giving me reports which I was not opening. This is not a login in again. Just one moment, I think. I'll need that should come. I need the touch ID. Is it giving answers?
So Unity was doing well.
That's coming?
Unity was
The Dasha, it has got logged out again and I can't log in without the touch. Okay. I think they're giving you the companies that's saying doing well. But my point was with these fast moving consumer goods that's doing well, like maybe the clothing industry or maybe like daily using accessories and those things, right? The issue is that it also takes away a lot from the environment. I cannot log into this. My ACCA. Here they have given health and wellness products like functional food and beverages, sustainable and eco-friendly products. Can you just see that? Can you see how eco-friendly and sustainable products are making the list, which may have not been the case about 5-6 years back. It must have not been like on the rise. Can you see that?
Yeah.
Okay, then thank you. Right. Do you all see that answer coming in?
Yes.
When you look for that is what I was trying to search. It's not coming on Google. You look at ChatGPT, it says wellness products are doing well. In 2025, fast-moving consumer goods sector is witnessing significant growth. They have said health and wellness is doing well. I think many people are becoming very conscious about health. right? That is also linked to being sustainable in some way, probably, you know, maintaining your health so that you can live longer. Okay, that's becoming one, especially because people are worried about how food is being prepared today's world, the kind of food that we are eating, whether it's good or not, the food we buy from out. It's so common out there that we very easily can intake things that are harmful for us. So that's the reason that people are becoming concerned about it. Then you can see plant-based alternatives are also doing well. Sustainable and eco-friendly goods, biodegradable personal care like shampoo, soaps. Eco-friendly packaging is becoming and coming in trend. Can you see that? Convenience and ready-to-cook meal kits. That's because people are very busy, right? Functional waters, enhanced hydration because people are very concerned about hydrating themselves, right? And then the e-commerce and digital transformation is happening this year. Direct to consumer goods, subscriptions. That's what I was looking for. You can see with sustainability becoming more of a issue, people are now switching to sustainable products as well. Although those trends have not hit our country that much now, in another 5-10 years time or another 5 years time, we could see that it would have taken upper hand. I think in Sri Lanka we are not so much into sustainable products and all, but definitely in the more European countries it's trendy. Meaning it's another 5 years time it's coming here. Or another 2-3 years time it's coming here. Oh, right. Environmental. Should be able to find some questions here. Let's only take the environment related questions. Okay, following have been made about environmental management accounting. It provides information mainly for external parties. It may include physical information about quantities of scarce resources used. What is environmental management accounting? Here, organizations are beginning to recognize awareness of the environment is important for long-term survival and growth. Environmental management accounting is becoming increasingly topical. There are increased legal and regulatory requirements relating to environmental management. Financial penalties exist. Ethically, companies should be seen to be aware and care about the activities that impact the environment. There is increased need to manage the risk and potential impact of environmental disasters. In order to maintain a positive public image and strong brand, companies need to demonstrate effective environmental management. Environmental costs are becoming increasingly significant, thus impacting a company's financial performance. Taking account of environmental effects in capital investment decisions. Better understanding of environmental costs that are otherwise hidden. Reducing waste and saving energy. Understanding environmental effects on life cycle cost, many of which are incurred at the end of the product's life cycle when you are going to dispose the goods. Ensuring environmental performance as stakeholders are becoming more interested in impact the organization have on the environment. Involving management accountants in longer term strategic planning for environmental related issues. They are asking here, what the following statements have been made about environmental management accounting. It provides information only for external parties. It may include physical information about quantities of resources, scarce resources used. What do you all think the answer is there? Two only you all are saying. Correct. This is the one we did now, no? No. Following statements have been made about environmental cost accounting. The majority of environmental costs are already captured in a typical organization's accounting system. The majority of environmental costs are already captured in a typical organization's accounting system. No, you all think no, majority of costs are not. I don't know, you all tell me. Input-output analysis divides material flows in an organization into three categories: material flow, system flow, delivery and disposal. No, that is what flow cost. That's wrong. First one, the majority of environmental costs are already captured in the typical organization's accounting system. Yes or no?
What's the statement again?
Majority of environmental costs are already captured in a typical organization's accounting system. You are saying no, it's not captured. But I don't know. You all tell
It
me.
depends on the costing system actually.
But majority will be captured or not?
Not the majority. Let's say if it is life cycle costing, it could have been the majority.
But they have not mentioned anything. What do you think, Shafi? To be captured. Second one, you all know for sure it's wrong. First one, will it be captured or not? Most of them are captured in the potentially hidden cost. But will majority be captured or some of them will be captured? So neither are correct, you are saying? Wrong. First one is right. Majority of the environmental costs are already captured. But what is it? Most of them are hidden. Okay, don't forget that. Majority are already captured, but most of them are hidden, and some of them are directly there. Can you see that? A road haulage company has decided to adopt environmental management accounting and to include an analysis of its environmental costs in its monthly management reports under 4 cost categories. One of the significant costs of the company is fuel for the trucks. So what is that? Conventional, potentially hidden, contingent, image and relationship. The fuel cost. Fuel cost. What? Conventional or potentially hidden.
Potentially. Poor costing.
So conventional also. Correct. Which of the following should be categorized as internal failure cost by a producer of bulk chemicals? Fines payable to the government for pollution more than the prescribed limit. Fines are payable for internal or external failure. Okay. Cost of disposing of toxic waste, that is a byproduct of the production process. The toxic waste is carefully collected in containers in the factory as it comes out of the process. Where is the factory waste? Inside or outside? Inside. So it's internal or external? Why? Waste means failure has occurred, but it's still inside. So is it internal? Okay. Salary is another cost of a pollution monitoring team that monitors the emission to ensure they are below a permitted level. What is that? Monitoring is trying to what? Detect. Filtering equipment used to reduce emission into the atmosphere to reduce emission below legal limits. They are trying to reduce. What are they trying to do then? Prevent. So what's the answer? Which of the following should be categorized as environmental failure caused by an airline company? Compensation payments to residents living close to the airport for noise pollution caused by the aircraft. Noise pollution is cause meaning failure has occurred. So is it a failure cost? As environmental failure cost, that means internal and external both. Air pollution due to the airline's carbon emission from the aircraft engines. Penalties paid by the airline to the government for breaching environmental regulations. What are the environmental failure costs? Compensation payments to residents living close to airports for noise pollution caused. Air pollution due to airline's carbon emission from the aircraft engine. Penalties paid by the airline to the government for breaching environmental laws. All three. Correct. A company grows different types of tea leaves and blends them together. The tea leaves are picked by hand because too many leaves were damaged and wasted when picking machines were used. The tea leaves are then dried and processed, and any waste produced is recycled. Even today they don't have machines, people do it by hand. Why? Because they have tried doing by machines but it's not successful. That is why tea leaves are even today picked by hand. The company regularly tests its tea for contaminants in line with food safety legislation. It recently identified that one tea plantation contained high levels of contaminated soil after the use of a new pesticide. One tea plantation contained high levels of contaminated soil. Contaminated soil meaning what? Wastage has happened or not? Okay, I don't know. Identify the environmental cost classification of each of the following. Cost incurred to clean contaminated soil. Cost incurred to clean the contaminated soil. Clean contaminated soil. What is contaminated soil? So what is it? Company regularly tests its tea for contaminants in line with the food safety legislation. It recently identified that one tea plantation contained high levels of contaminated soil after the use of pesticides. What is that? Is it prevention or internal failure? Next one, staff cost for picking leaves by hand. Staff cost for picking leaves by hand. Prevention. Cost involved in the recycling of waste. Recycling waste, that means you are taking the waste and recycling it. What's that? Internal failure or external. Cost incurred for testing tea for contaminants. Cost incurred for testing tea for contaminants. Detection. Cost involved in the recycling of waste. That's not clear because we don't know if the waste is. Here they have said the tea leaves are then dried and processed, and any waste produced is recycled. The tea leaves are picked by hand because too many leaves were damaged and wasted when picking machines were used. The tea leaves are then dried and processed, and any waste produced is recycled. That means before it's going out, they are recycling. So what is that? Cost involved in the recycling of waste? Internal or external failure? It's waste meaning one failure, internal or external. They are saying that the tea leaves are then dried and processed, and any waste produced is recycled. So is it internal or external failure? Internal. You're going with internal. What is this then? Cost incurred to clean the contaminated soil. The company regularly tests its tea for contaminants. In line with the food safety laws, it recently identified that one tea plantation contained high levels of contaminated soil after the use of new pesticide. What? Oh no, why did I skip that? Can I go behind? That was 29, no? Skip, I'll go away. What are the areas we said we'll do today? Throughput, environmental, relevant costing, and the other area I said? Those two, no? Relevant costing and limiting factors. We have to do that, right? After the break, we'll do that. I took a lot of time on this area because we have not done these questions so much, right? That's why I took some time to explain this.
They have 2 weeks more, I think.
For exam?
Yeah.
Correct. Why is that external failure? It is an external failure because it is a result of discharging contaminants into the external environment. The soil has been contaminated, meaning the environment outside has been contaminated. Right? That was internal failure because here they have told no, they dry, process, and then anyways they are recycling. So they are not letting it go out. It's inside. They are capturing inside and recycling. So that was internal failure. Got Got it? Okay. Which two of the following activities are environmental internal failure cost? Quality control inspections to monitor pollution level in water leaving a production process. They are monitoring, meaning what is that? Water purification treatment to clean wastewater before it leaves the factory. Is that internal failure? Okay, B then. Fitting a carbon filter to machine processors to reduce carbon emission. What is that? They are putting a filter, meaning they are trying to what? Prevent. Power usage measuring system to monitor energy consumption within the factory. Monitoring is what? Detection. Payment of fines for breaching environmental laws in the industry. You will pay fines if it's external failure. Installation of heating pipes in the factory to reduce heat loss. Prevention. Public relation cost to remedy reputational damage caused by accidental river pollution. That is internal or external. Capturing and recycling of waste exhaust gases to generate energy. You all understood that part now? That's why I took some time for environmental, because with today's class itself you all will learn that. Can you see that? But take some time to study the note. Just go through the sustainability and all of that and see how those modern trends are affecting. Okay, let's just do this. So we did that at the beginning also. A company's actual production figures for a batch of products are as follows. Material 2000 kilos, this is environmental, $10,000. Labor and overheads 26,000. Then altogether for 2000 kilos total cost is what? $36,000. There is a normal loss of 10% out of the kilos. So 1800 kilos. Out of that there is another abnormal loss, unexpected loss. Abnormal loss meaning what? Unexpected loss. You all have done process costing. Another 100. So good output only 1700 kilos. This is input output analysis. You input 2000 kilos, in the output 1700 kilos. 300 kilos have got wasted, 200 kilos some normal loss, 100 kilos some unexpected loss. In terms of environmental cost categories, how would the normal and abnormal losses be described? Normal loss, conventional cost, contingent cost or potential hidden cost. Abnormal, convention, contingent. Which one? Normal loss is what? Conventional cost or potential hidden or contingent? Is it contingent? Is it something we have to pay in the future? Contingent meaning something we have to pay in the future. Then conventional meaning what? Normally we are expecting that for the resources we are paying for that. Like maybe something. Hidden cost is what? We are not expected, it's hidden somewhere. So what do you think normal loss is? Normal is something, a loss we are expecting. So what cost is it? What? Conventional. Okay. Abnormal losses? Normal loss. How will this be described? Or will normal loss be hidden in the normal overheads? Will the loss be hidden in the overheads? It can be a hidden cost also. What do you think it is? What? You can't put this answer also. You can't put that answer. What was that question number? There's no way to put that answer. One moment. Where did we do that? In the review, only what we did will come, no? What about the questions without the answers? That was question number, we can't skip, no? Can't put this answer. One moment. So for this the answer so with normal loss, the normal loss is typically expected and is built into the production process. It's an environmental cost and it may not be fully accounted for. They are saying normal loss may not be fully accounted for. Why can you see this normal loss is included in what? Material and labor overheads. So it's included in the other cost. Meaning what? It will be what? Potentially hidden. It will be hidden. Right? And abnormal loss is unexpected. Right? So it's more likely to be investigated. Because it was unexpected loss, we are more likely to investigate it. So therefore it is a conventional cost. Normal loss will be hidden in the general overheads. Can you see? Because in the material and labor cost it's hidden. We take that, no, the 36,000 itself we'll take. Can you see that? But abnormal loss, it happened without us expecting, so we will go and look into it. Meaning it will be conventional cost. We'll account for it. Okay? So it's A. Okay, done. So we'll take a break now, and after the break we are going to be doing relevant costing and limiting factors. Okay? The time is 10:15, come at 10:30. So in stock use regularly needs to be replaced. We are taking at the current replacement. If there is no other use, it won't be replaced. No. So we have to then find the higher of the resale value or alternative use. If it is scarce, there will be opportunity cost because we have to take it from somewhere else. So then we take the opportunity cost. Right? Then scenarios I am not reading. For labor, if there is spare capacity, they can still work at the same rate. No? So we don't have to pay them more. So the relevant cost is nil. If it's full capacity, we have two options. We can hire more workers, then we will see what is the amount we are paying to hire. Or we can shift from another department. Then we have to take the contribution lost because you are taking from the other department plus the variable cost.
The variable cost as in the labor cost, right?
Labor cost. For overheads, also we generally we take only the overheads that are relevant to that decision. If it's fixed overheads, we don't take it. Relevant cost of non-current assets, it's the lower of the asset replacement cost or the recoverable amount. Okay, so that is about relevant costing, but I can see you all have sent lots of doubts. Shall we start with the doubts? Who sent? Rahman has sent first. Throughput accounting doubt no, you have sent. These are throughput accounting doubts, no? Your doubts are all from the... I did that environmental costing question in class. You have circled 63. 63, 64 I did in class. When we did environmental costing, I did those questions. You have sent no 64, 63. I did that question in class. You can't remember? What? 64 also we did. All those questions we did. Environmental cost.
I have a doubt on 63 only.
But we did only have a doubt.
No, 63 only. 64 is too low.
63 also I did, no? 63 also I did, but wait, I take this book. PPIM revision. Okay, tell me what are the questions your doubts are starting from? From 53 you are having doubts, no? When demand exceeds supply, which of the following situation would increase the throughput accounting ratio? When demand is higher than supply, what will increase the throughput accounting ratio? An increase in the speed of the fastest machine in the production process. An unexpected increase in the factory rent, that's going to worsen. A 5% wage increase linked to a 8% improvement in productivity. You increase wages by 5% but productivity rose by 8%. Which shows that cost has increased by 5% but revenue or the benefits have increased more than that. A 10% sales discount to stimulate demand by 20%. Even that's good. Oh, but wait, why do you want to stimulate demand? You are already having a situation where demand is exceeding supply. You are having a problem where you want to increase your supply. So your bigger concern is to increase what? Productivity and increase the supply. So is the answer C? Yeah, because your concern is about productivity. You don't want to increase demand more, you already have too much demand. You are thinking of increasing your supply. So for that, what will you do? You will increase your productivity. So if
productivity increases, the bottleneck
resources will become better, so they can work faster. Can you understand that? So in this situation, C is the answer. Next one was around 50. A manufacturing company uses machine C, which is operational for 5 hours a day, to manufacture 4 products W, X, Y, Z. Factory costs 150,000 per day. The company uses throughput accounting and its objective is to maximize profits. Information relating to these products are as follows. W, machine rate per machine hour, production rate per machine hour, 200 units per hour. X, 500 units per hour. Y, 400 units per hour. Z, 350 units per hour. Selling price per unit, material cost given, conversion cost given. If the company is not able to increase the availability of machine C's operational hours, they have only 5 hours a day. What is the production ranking of product Y? So operational hours is the bottleneck. Production rate per machine hour, 200 units per hour. That means 200 units per hour means in 1 unit takes how many hours?
So 1 unit takes around 40 hours, right?
200 units per machine hour.
So to make one...
How many minutes? No, we have to see.
3.3
How many minutes? 3.3 minutes.
Is it 5 hours a day?
No, we are saying how many hours per unit. How many hours per unit? How can I write on this? Not enough space to open that. So how many minutes for W? 3 point?
3.3.
How many minutes for X? So that is 500 divided by 200 units per hour. So then what you have to do is 200 for hour, meaning
5/200.
3.33 per minute into 60 minutes. Yeah.
This machine has-
3.33 no for one unit 3.33 minutes. So for next one
8.3.
question number 50.
6.
W how many? 3.33 minutes, correct? X how much?
8.3.
8.3. Y how many minutes per unit we are seeing? Okay.
6.6.
Is it?
It's not in minutes, in hours, right?
No, we are seeing in minutes. 6.6 minutes per unit.
5.8. But in answer they have multiplied by
Seeing time per unit throughput.
Wait a minute. Production rate per machine hour 200 units in 1 hour.
yes.
So it should be 0.27 minutes.
Wait. 200 units in 1 hour. So 200 units in 60 minutes. So in 1 minute 3.33 units. Yes, sorry, yes. It's 3.33 minutes in 1. Okay, we are taking how many units? So we have to see how many hours per unit. So what we are seeing is wrong. This is, we are seeing how many units in 1 minute. But what we want to see is in 1 minute how many units.
You mean time per unit?
No, we have to see the time. How many minutes for 1 unit we have to see. How many units? So wait, 200 units in 1 hour, no. Then we are trying to see for 1 unit how many hours. Correct? So we have to divide by 200. We divide by 200. So 1 divided by 200 is 0.005 hours. We'll take it in hours itself. Okay, beta. You have to divide it and take. So for 1 unit, 0.005 hours. Correct? Don't need to convert a minute. One divided by 500. 0.002 hours. 0.0025. Okay, now what we have to do is we have to find the throughput and then divide it by the throughput per hour and then rank. That's how they have done, no?
But they have multiplied the throughput by this 200, 500, 200 like that.
What? One moment.
Shall I send the answer?
Yes, send me the answer. Allah, no, we don't have to do it the way they have done. We can do it the other way also. We can get the answer. They have found throughput per machine. Now we can find. No, we don't have to do. We can do our way also. We will get this answer. Wait, we'll do it our way and get the answer. Same thing only they have done. So what is the throughput now? Tell me for the three products. Throughput. What are the products that's there? W, X, Y, Z. Tell me what is the throughput? 200 and X, Y. Throughput how to find? Selling price minus material cost. Next one. 140. Now divide this by 0.005, 0.002, 0.0025, 0.0028. What are we getting here? Same answers, no? Getting it, no? So they have done the same thing, but they have done confusing way. We are doing in the way we know. Don't look at the marking scheme. Can you understand that? Thing is, most important thing is, if you're getting confused with those proportions, take it like this: 200 units in 1 hour. Then for 1 unit, how many? Then you won't go wrong, no? Then you won't go wrong, no? Got it? Okay. So calmly do, nothing will go wrong. So is the ranking coming then? The answer is right then. So based on this, what is the ranking? 1, 2, 3, 4. Correct? So first is the fourth one. Now they are asking what is the ranking for product Y? 4. T is the answer. What's your next doubt? Next doubt is what? 63 I did, no, but no, 63 I did. Okay, what is 63? Okay, 63, the monthly budget for process X is shown. They have given the inputs for 1000 kilos, 50,000 material and 30,000 labor, altogether 80,000 for 1000 kilos. The output, good output 700, waste 100, scrap 200. The company is looking at adopting environmental flow cost accounting, in which all the material and system costs will be apportioned on the base of weight. Calculate the total net cost of waste and scrap using flow cost accounting. Give your answer to the nearest dollar. Okay, total cost of waste and scrap. The company is looking at adopting environmental flow cost accounting in which all material and system costs will be apportioned based on weight. So what will be the material cost? For material cost. Now for this 100 and 200 kilos of waste, how much of waste is there? 100 kilos of waste, right? And there is also scrap, how much? 200 kilos of scrap. Wasted products, they are telling you expected waste 10% and must be scrapped at a cost of 10. So we have to pay $10 to scrap it off, meaning 1000. They have given that, no? And also the scrap items we can sell for 15. So we are getting an income of 3000, correct? But the thing is, this 300 kilos were manufactured, no? These 300 kilos were manufactured. So what is the cost of manufacturing this 300 kilos? This is the cost of selling it again. This is the cost of income you are getting. But then 300 kilos are manufactured. They are telling to take that cost based on what? Based on weight, apportioned weight. They are saying in which all the material and system costs will be apportioned on the basis of weight. So, apportioned on weight meaning this 80,000 divide by 1000, right? And how much do you get then? What is the cost per kg? 80. Alright. Wait. In which all the material and system cost. So, material and system cost. Everything based on weight. How much have they taken the 300 kilos based on the answer? Have they taken 300 into 80? 24,000. 24,000 minus the 1,000 plus the 3,000. Is the answer 26,000?
22,000.
22. That means they would have.
They minus the 3,000 also.
They took this as 24,000. This was 24,000. That was 24,000. This was 1,000. But the scrap they minused. Expected scrap is 20% of input and can be sold for 15. Then you have to add that, no? You're getting an income out of that. They got 24,000, is that right? The waste 1,000 they minused? No, but it should be 26,000 because the scrap is the income. How will they put it as an expense? There's a mistake there then.
Answer is 22,000.
Answer 22,000,
Yes.
but the scrap is income, no? How have they minus that? The net cost of waste and scrap using flow cost accounting. Expected scrap is 20% of input and can be sold for $15. That means you are getting an income, no, there.
What they have done is minus 1,000 minus 24 plus 3.
Okay, correct. That is my mistake. Guys, this is the cost. Minus 24,000 cost. That's my mistake. Minus 1,000 cost. So total cost minus 25,000 plus 3,000 income. So how much? Minus 22,000. This is a minus 24,000. Correct? Minus 24, minus 1,000, both are cost. This is the income plus 3,000. We have to add that. So altogether minus 22,000. Got it now? It's a minus 24,000. What's the next doubt? 99.
Yes. It is from limiting factor.
No, we'll do that later. Now I'm going to the relevant costing question. No? I hope this has not got signed out again. Okay, that's not good. We're doing relevant costing, right? Did we do bits and pieces? No, right?
Yes.
We have not done bits and pieces. No, not done. Bits and Pieces operates a retail store selling spares and accessories for the car market. The store has previously only opened for 6 hours per day, 6 days per week for 50 working weeks in the year. But BP now is considering also opening for trading on Sundays. Average daily sales from Monday to Sunday is $10,000 per day with an average gross profit margin of 70%. Sunday revenues are expected to be 60% more than the average daily revenues for other days. So Sunday is their peak day. B&P buys all of its goods from one supplier. The supplier gives a 5% discount on all purchases if annual spend exceeds 1 million. The store will have to be supervised by a manager currently employed by the company and paid an annual salary of $80,000. If he works on a Sunday, he will take the equivalent time off during the week when the assistant manager is available to cover for him. The store will have to be supervised by a manager currently employed by the company and paid an annual salary of $80,000. If he works on a Sunday, he will take the equivalent time off during the week when the assistant manager is available to cover for him at no extra cost to BP. So if he takes Sunday off, what's he doing? No, if he works on a Sunday, he will on a weekday he will be taking off. So the manager will be there. He will also be paid a bonus of 1% of the extra sales generated by Sunday trading. The store will have to be lit at a cost of $30 per hour and heated at a cost of $45 per hour. The heating will come on 2 hours before the store opens in the 25 winter weeks. The store will have to be lit at a cost of $30 per hour and heated at a cost of $45 per hour. The heating will come on 2 hours before the store opens in the 25 winter weeks. So they are opening the shop for 8 hours now per day, but the heating they have to put for 8 hours. By 2 hours before they open itself, they have to put the heater. So heater will be on for how many hours? 8 hours then. The heating will come on 2 hours before the store opens. Store is opening for 6 hours, but heating is coming 2 hours before. To make after 25 winter weeks, only in the winter weeks, that means out of 50 weeks they are opening, 25 winter weeks, only in winter they are putting the heater. To make sure it is warm enough for customers to come in at the opening time and will remain on while the store is open. The store is not heated in the other weeks. So non-winter weeks not heated. It is a company policy that gross profit is stated after deducting the cost of the goods sold. Staff cost, energy and rental costs are not deducted from sales in determining gross profit. The store employs 4 employees in addition to the manager. Each work 5 days a week and are paid $200 per week. They are all currently working on Saturdays and take a day off in lieu of this during the week. If Sunday trading is introduced, 2 of the existing staff will work on Sundays instead of Saturdays and will be paid a premium of $30 each. 2 part-time employees will be hired for $20 each per Saturday and $30 per Sunday. By how much will the introduction of Sunday trading increase annual gross profit? They are saying if they open on Sundays, how much will the gross profit increase by? The store has previously opened only for 6 hours per day and 6 days now they are going to open for 7 days. Average daily sales from Monday to Saturday is 10,000 per day with average gross profit of 70%.
What type of question is that? Section B?
Relevant costing, yeah, section B. Listen carefully. Average daily sales from Monday to Saturday is 10,000 per day with average gross profit of 70%. Sunday revenues are expected to be 60% more than the average daily revenues of the other day. So what will be the sales on Sunday? 60% more. Average Monday to Saturday is 10,000 per day, no? So Sundays is expected to be 60% more than the average daily sales of the other days. So what is your Sunday revenue going to be? 16,000. How many Saturday Sundays are you going to be open for? They are asking only for one Sunday. Let's read the question again. How much will the introduction of Sunday trading increase annual gross profit? So how many Sundays will be there in the year? 50 weeks. Can 50 Sundays? No, yeah. So we have to multiply this by 50. So how much? 800,000. Okay. Okay, next they are saying BP buys all of its goods from one supplier. This supplier gives a 5% discount on all purchases if annual spend increases to 1 million. Oh. So how do we see what their current spend is? The store will have to be supervised by a manager currently employed by the company and paid an annual salary of 80,000 if he works on Sunday. But wait, they said something about the gross profit margin. Gross profit margin is 70%. Is it going to be the same? Where did they mention about that? It is the company. Let's read again. Wait. Okay, let's just go reading. The store will have to be supervised by a manager currently employed by the company and paid an annual salary of 80,000. So does he have to be paid anything more if they are opening on Sunday? No. If he works on Sunday, he will take the equivalent time during the week when the assistant manager is available to cover him. So there will be no extra cost. Meaning, is that relevant? No. He will also be paid a bonus of 1% of the extra sales generated by Sunday trading. That's the additional cost, right? Bonus. 1% of additional sales. What was the additional sales? 800,000. Meaning how much is he going to be paid? 8,000? Okay. The store will have to be lit at a cost of 30 per hour and heated at a cost of 45 per hour. The heating will come on 2 hours before the store opens in the 25 winter weeks, to make sure it is warm enough for customers to come in at the opening time, and will remain on while the store is open. The store is not heated in other weeks. The store will have to be lit at a cost of 30 per hour. So lighting on Sunday will be how much? Because when you are opening it on a Sunday, you have to light. Lighting will be for 30 per hour. 6 hours only, because you don't have to put. And how many Sundays? Lighting will be for the entire year, no? Not only for winter, no? So for 50 weeks itself, you have to do the lighting. What about heating? Heating 45 per hour, but it will be there for how many hours? 8 hours. For how many weeks? Only for the winter weeks. 25 weeks. Tell me to see the amounts there then for lighting and heating for Sunday. How much? Here 9,000. Here? 9,000. Okay. It is a company policy that gross profit is stated after deducting the cost of the goods sold. Staff cost, energy and rental costs are not deducted from sales in determining gross profit. The store employs 4 employees in addition to the manager. The store employs 4 employees in addition to the manager. They each work 5 days a week and are paid 200 per week. They are all currently working on Sundays and take a day off for this. If Sunday trading is introduced, 2 of the existing staff will work on Sunday instead of Saturday and be paid a premium of 30 each. That is the only extra cost. So what is the premium? 30 each for 2 people for 50 weeks, right? How much? 3,000. 2 part-time employees will be hired for 20 each per Saturday and 30 each per Sunday. Part-time employees will be hired for Saturday. Now, is that relevant? The Saturday is one. Why are they taking that Saturday part-time worker? 2 part-time employees will be hired 20 each for Saturday and 30 each for Sunday. Should we only take the Sundays one, or should we take the Saturdays part-time workers one also? Is your question. What should you do? What should you be doing? Guys, the first question here is asking you how much will gross profit increase by, right? So do we have to take all of this for that? No, we don't. For the question, first question, we don't have to take all of that. First question is only asking us about what? Gross profit increase by. So weekly the sales increase is this much, and then what we have to assume is we'll take this later. Let's keep it there. But for the first question, we don't need that. The gross profit will increase by how much? The gross profit margin is how much did they say? 70%, right? So they have not said that it's going to change or anything, no. Gross profit margin, have they mentioned that it's going to change? No. It will remain to be 70%, right? So gross profit margin GP margin is 70%. So how much will the GP increase by? This is the new sales. For this there will be a 70% gross profit. So what is the new gross profit increase? Is it this amount? That's the new gross profit. Correct? So we have the sales. Gross profit will be how much? Correct? The first question we have the gross profit will be 800,000 into 70%, correct? So what is the cost of goods sold? We can take the difference between the two and find. But what is the gross profit increase? 560,000. Sorry. No, but there is something else. Sorry. I'm sorry, I did not include that. Can you remember that they mentioned that there is that the supplier gives a 5% discount? So earlier, wait one moment. I don't want to erase this because we'll need this later. Okay, wait. They mentioned that when the purchasers are exceeding 1 million, no. Earlier, what was their purchasers? It would have been what? Earlier their purchasers would be previous 10,000 sales per day, correct? For 6 days a week, correct? For 50 days, for 50 weeks. 6 days a week for 50 weeks. What was their sales earlier? 10,000 per day for 6 days for 50 weeks. 3 million, no? Correct? In that, what was their gross profit margin? 70%. So what would their gross profit have been? GP would have been 2.1 million, correct? So what would the cost of goods sold be? 900,000, no? So did they get the discount earlier? No. But now what is their cost of goods sold going to be? 900,000 plus how much here? No, difference. What's the difference? 800 minus 240, correct? So now their cost will be 900,000 plus 240. So is it exceeding 1 million?
Yes.
So they will now get the discount. So that will reduce their cost now. So now this will be the total purchases. On this total purchases, they are going to get a what? 5% discount on all purchases. So what is the discount going to be? 50. They are going to get a 57,000 discount, correct? So it will be like this. There is an additional GP of 560,000, correct? But we are also getting a discount of 57,000. So that 57,000 supplier discount. Wait, it will be take it like this. Sorry. So your new revenue will be what? 800,000, correct? And your cost of sales was how much? 240,000 was the new cost of sales, right? 240,000. We found that, no? And the discount will be how much? We are going to get another discount of 57,000 as well. This 57,000 discount we are only getting because of opening on Sunday, no? So it's directly relevant to this. So what is your gross profit then after minusing that discount also? 500 and sorry. One moment. Wait, this discount will reduce your cost of sales. The discount that you are getting, you will reduce your cost of sales. It's a discount received. So 240,000 plus the discount received. Our discount received we add, no? Discount received is added, right? To GP. We can do it like this. Cost of sales 240. What was the amount you get there? Discount received is added to GP. You all would have learned it earlier. 560,000, correct? To this we add the discount. Discount received we add, right? 57,000 we add. So 560,000. To that we add the discount received. 617,000. Got it? So answer is D. Next one. What will be the annual relevant cost of the manager for Sunday trading? They are asking manager's relevant cost. So I think here we did not do the manager. We already did this premium, heating, bonus, lighting, those workings though. They are asking the manager's relevant cost. 0, right?
0.
Ah, no, that premium they paid him. Did they pay that premium to him? Let me see what did they tell about manager. The store will have to be supervised by a manager currently employed by the company and paid an annual salary of 80,000. If he works on Sunday, he will take the equivalent time off during the week when the assistant manager is available to cover for him at no extra cost. He will also be paid a bonus of 1% of the extra sales generated on Sunday. We did that working. 8,000. Right? What is the relevant cost of the manager for Sunday trading? Because we are only paying him the bonus, right? So that's the relevant cost. Got it? Akib, got it? Though I think most of the other things we have done. What is the annual relevant cost of heating and lighting the stores on Sunday? Heating and lighting both together. 18,000. We did it, right? Do you all remember the working for that? Heating and lighting together, no, they asked? 18,000. Heating 6 hours, $30 per hour into 50 days. Heating 8 hours by 2 hours before into 45 per hour into 25 days. Annual rent of the store is 450,000. The annual relevant cost of rent for Sunday trading is 0 because you are not going to pay anything more. That just instead of closing the shop, you are opening the shop. Why is the relevant cost of rent 0 when evaluating whether to trade on Sunday? It is an uncontrollable cost. It is an opportunity cost. It is not an incremental cost. It is an optional cost. It is an uncontrollable cost. It is not an opportunity cost. It is not an incremental cost. It is not an incremental cost. What is the annual relevant cost of labor for Sunday trading? For labor, this bonus 800 is 8,000 is managers. Labor meaning without the managers, no? They are saying the store employs 4 employees in addition to the manager. They work 5 days a week and are paid 200 per week. They are all currently work on Saturdays and take a day off in lieu of this during the week. If Sunday trading is introduced, 2 of the existing workers. What is the annual relevant cost of labor for Sunday trading only they are asking. The store employs 4 employees. They work 5 days a week and are paid 200 per week. They are all currently working on Sunday and take a day off. If Sunday trading is introduced, 2 of the existing staff will work on Sunday. This 3,000 we calculated. Let's calculate it again. 2 of the existing staff will work on Sunday instead of Saturday and will be paid a premium of 30. So premium, 2 of the staff will be working for 50 weeks, no? And will be paid a premium of 30 each. That's how we got 3,000.
Yes.
2 part-time worker employees will be hired for 20 each per Saturday and 30 each per Sunday. So Sunday's one is how much? 2 part-time employees will be hired for 30 for each Sunday, correct? And for Saturday? Part-time. Tell me the amounts. $8,000. We are taking the Saturday's one as well. Why? Because of this Sunday, no, we need more people for Saturday. Can you understand? Because of that is relevant. Can you see that? Because of this only that is happening. Right? So we have to include it. Okay, any other doubts you all have sent me? Some Aki also sent a doubt, no?
That one I got the answer, but it was a long method.
Wait, okay. Ah, 3.4. This is an easy question. 100 and okay, that's a little confusing that question, but can be done. 101 is Akib's doubt. Huh? That's also a relevant costing question, correct? Oh no, I have a different 101. This is coming under which lesson? Ah, yeah, this one, no? This one, right? KPLC makes 2 products, Kyon and Kutwo, from the same raw material. The selling price and the cost details of these products. You all have any doubts? Cost details of the 2 products are shown below. Selling price 20, direct material $2 per kilo, $6. For the other one, $2 per kilo, $5, meaning for the first one you are using 3 kilos. For the second one you are using 2.5 kilos. Direct labor $4 per the first product and $3 for the other one. Variable cost 2 and 1.5, contribution per unit 8 and 8.5. The maximum demand for these products is 500 units per week for Kyon and an unlimited number of pieces per unit for Kutwo. What is the shadow price of these materials? This is limiting factor. If materials are limited to 2000 kilos, so can I do it after?
Yeah.
Now let's do limiting factor, the note, and then come to that. Okay? Areas in cost volume profit analysis, do you all remember? Break even, right? How do you find break even? Sales, fixed cost divided by contribution per unit. How do you find contribution? Sales minus variable cost. So break even revenue is break even volume into the selling price, or we can even take fixed cost divided by the CS ratio. Break even revenue for multi-product is fixed cost divided by the weighted average CS ratio. Margin of safety is how much units above the break even we are currently selling. So you can take it as budgeted sales volume what we are currently selling minus the break even sales. Margin of safety as a percentage, we take the margin of safety volume divided by the budgeted sales volume into 100% to see what percentage we are safe by. Contribution to sales ratio, it's a CS ratio. We are taking for the, if it's per unit, we can take contribution per unit divided by selling price per unit. Or if they are given totals, we can take total contribution divided by total sales. The CS ratio we can also find it this way. Remember the shortcut methods? If they have given like A and B are sold in the mix 1:3 and A has a CS ratio of 40%, B has a CS ratio of 50%, then we will take the first one's ratio 1 into 40% plus second one's ratio 3 into 50% divided by the total 1 plus 3, 4. We will get the weighted average CS ratio. If they are given percentage wise also we can do it. For A and B, 25%, 75% ratio, we can take 25% into 40% plus 75% into 50%. Target profit, how do you find? How much to sell to get a target profit? Fixed cost plus the target profit divided by contribution per unit. Target revenue, we can take fixed cost plus target profit divided by CS ratio. Target revenue for multi-product, same thing, fixed cost plus target profit but divided by weighted average CS ratio. So this is a break-even chart. At the break-even point we make no profit, no loss. Right, below the break-even point if we sell it will be loss making, if we sell above that it is profit making. So remember I told you all how to do the profit volume chart. We have to do the ranking and see which product is most profitable, that we make first, then the next, right? So here alpha if we are making, it's the most profitable product. Then when we are making alpha and beta, how does the profit change? Then when we are making all three, how does the profit change? Where this is cutting the revenue line, that is the break-even revenue. Can you remember that? There are limitations as well. When we are drawing these charts, we are assuming so many things now. We are assuming it's a straight line. We are assuming that selling price won't change, variable cost won't change, contribution won't change. But in reality, all those things will change. So those are the limitations in general. Right? What did I tell I'll do till today? I said I'll do limiting factors also today. This and limiting factors. Did I do this question? I go check and see. Under CVP have I done this? Cost volume profit analysis, here they have done this. Oh, done? Not done. Okay. PCO makes two products, P1, P2. Budgeted details of which are as follows. Selling price, cost per unit, they have given direct material, direct labor, variable overhead, fixed overhead, profit per unit. Budgeted production and sales for the year, P1 10,000 units, P2 8,000 units. The fixed overhead cost for P1 relate to apportionment of general overheads cost only. However, the fixed overhead for P2 also includes specific fixed cost totaling 2,500. If only P1 were to be made, how many units the nearest unit would need to be sold in order to achieve a profit of 60,000 each year? If they only sold P1. They have said budgeted production and the sales for the year P1 10,000, P2 8,000. The fixed overhead cost for P1 relate to apportionment of general overhead cost only. However, the fixed overhead for P2 also includes specific fixed overheads totaling 2,500. Now, can we find the total fixed cost? What's your total fixed cost? P1 1.2 into 10,000 units, correct? 12,000, no? P2 1 into 8,000. 8,000. So total fixed cost is how much? 20,000. But in this they have told 2,500 is directly related to P2. So remove that specific fixed cost below. So if we are only making P1, we have to incur how much then? If we are only making P1, we don't have to incur this 2,500. So we can remove that. So how much will it be? 17,500. They are asking the break even. If you only made, so break even with the target profit. If you only made P1, so how much we need to sell in order to make a target profit? Volume to make target profit. How do you find that? Fixed cost plus the target profit 60,000 divided by contribution per unit. What is the contribution per unit of making P1? 10 minus variable cost 3.5 plus 1.5 plus 0.6. 5.6. 77,500 divided by to the nearest unit.
70,640.
Okay. Next one, if both products were sold in the budgeted mix, what would be the break-even revenue? They are asking break-even revenue for multi-product situation. So what is the formula? Multi-product break-even revenue. What's the formula, guys? Multi-product break. Let's see if they'll remember. What?
Revenue, right?
Multi-product break-even revenue.
Weighted average CS ratio.
You divide by weighted average CS ratio. What do you divide? What comes on top? Are they asking for target profit? No. So fixed cost
Divided by weighted average CS ratio.
divided by weighted average.
CS ratio.
How do you find the weighted average CS ratio? Total contribution divided by total sales. Total contribution. From both products, we have to see what is the contribution, right? Okay, let's tell me what's the contribution per unit from P1. Five point something, how much was it? 5.4 into 10 minus 3.5 minus 1.5 minus 0.6. 4.4 into 10,000 units, correct? 44,000. What's the contribution per unit from the second product? 8 minus 5, 4, 5. 2.6 into 8,000. 20,800. What's the total contribution then? Added together 64,800, correct? What's the total sales? 10,000 into $10, 100,000, correct? 8,000 into 8, 64,000. So what's your total sales? 164,000. What's your CS ratio then? Zero point 395, correct? Fixed cost was how much altogether? including the specific 20,000. 20,000 divided by 50,620. Nearest is coming to that, right? 50,600 and do you want to copy this down? Copying it down? Or you're okay with it? Don't need to copy down? Next one, the production manager has reviewed the budgets and suggested the following changes. Material cost per unit of P1 should be 4 per unit due to change in supply. They have taken as how much? They have taken as 3.5. It should increase. Fixed cost of P2 will be reduced by 2,500 due to a change in the production process. What impact would each of these have on the break-even revenue? First one is increasing the material cost, meaning it's reducing the contribution. When the contribution reduces, we will have to sell more to break even, no? So it will increase. Oh, they are asking have changes on the break-even revenue. It will break-even revenue. The break-even revenue we calculated based on what? CS ratio, no? Think what will happen to the CS ratio here? Contribution will fall. So CS ratio will fall. When the CS ratio falls, we will have to sell more or less. Now, for example, fixed cost was 20,000 now. Divided by 0.4 is 50,000. 20,000 divided by 0.35, you have to sell more to break even. So, break even sales will have to increase. First one. Second one, fixed cost is reducing. If the fixed cost is reducing, we will have to sell less, no? So, we can't answer this. Oh. What impact? We can only do A and B. I don't know. You can't answer this. First one it will increase, second one will decrease. That's one, right? First one we have to sell more, second one we have to sell less. It's correct. Because A was the answer and that their option for A is because of that is right. Which two of the following are lines drawn in the break-even chart? Total revenue, total cost, total profit, total contribution. Total revenue and total break-even chart, we have the total revenue and the total cost. Total profit, there is no line, we have to just see. Total contribution also, it's not clearly shown. Identify by choosing the relevant box in the table below whether each of the following statements regarding cost volume profit analysis is true or false. As volume of sales changes, the increase in profit equals the increase in contribution, provided that fixed costs do not change. As volume of sales increases, the increase in the profit will equal the increase in contribution, as long as fixed costs do not change. That means now let's say you have sold 20,000 units. If you are selling more than that, whatever increase in contribution will directly be increase in profit, because fixed cost has already been covered. True or false? At the break-even point, total contribution equals total fixed cost. At the break-even point, total contribution is equal to the total fixed cost.
At the break-even.
At the break-even point, what is your profit equal to?
Profit is equal.
0. How does profit be equal to 0? Contribution minus fixed cost 0. When will it be 0? When both are the same. An assumption has to be made that variable cost per unit remains constant. When we are doing the cost volume profit analysis, we are making that assumption. We are making assumption, no. An assumption has to be made that variable cost per unit remains unchanged, because otherwise how can we draw? When we are drawing the cost volume profit analysis, we are assuming everything. If fixed cost increase when output exceeds a certain limit, it is not possible to calculate the break-even point. If fixed cost increase when output exceeds a certain limit, so output above a certain limit, there is an incremental fixed cost. If there is a situation like that, it is not possible to calculate break-even. What? if there is an incremental fixed cost above a certain point, they are saying it's not possible to calculate break even. What? False or true? What is it? What? If fixed cost increase when output exceeds a certain, that means there is a stepped fixed cost. If there is a stepped fixed cost, we can't calculate the break-even point. Have we studied anything with stepped fixed cost? No. But can we calculate it or not? It can be calculated. The last statement is not true. The break-even points can still be calculated in the normal way. If the calculated break-even point occurs above a limit where fixed cost increases, it is simply recalculated using the higher fixed cost. We just edit and calculate. It is therefore possible to calculate a break-even point when fixed cost increase. Got it? Naval we did. Then we are going to limiting factors. Together. So limiting factor is nothing much what we have done in throughput accounting. Same thing. There is a limitation. How do we find the optimum plan? We rank the contributions, and based on that, with throughput, right? Based on the ranking, we calculate contribution per limiting factor resource and rank it, and then just like we did for throughput, we calculate the optimum plan. But again, here also we are making a lot of assumptions which make that is the limiting factor, right? We assume that there is one objective. In reality, there will be many objectives. We assume that each product uses the same quantity of scarce resource. In reality, it will be different. We assume the contribution per unit is constant. In reality, it will be different, right? We focus on the short term. We ignore any fixed costs. What is linear programming? If there is more than one limiting factor, right? And with linear programming, we calculate something called shadow price. What is shadow price? If there is scarce resource, in order to obtain one more resource, how much are we willing to pay? How much is that? That is the increase in contribution. If we have one more unit, how much will our contribution increase by? Up to that amount we are willing to pay. Right? So how do we calculate shadow price? We have to use that, remember, linear programming, there are equations are there. We have to add one Taylor time, meaning one more Taylor time, and recalculate simultaneous equation, new new coordinate, for the new coordinate, new contribution, and then we have to compare with the old contribution and see how much it has increased by. Can you all remember that? Yeah. So add one unit to the constant concerned, leaving the other critical constant unchanged. Solve the revised simultaneous equation and get the new optimum solution. Do you know what I am talking about? Then calculate the revised optimal contribution and compare with the old. That increase in contribution is how much we are willing to pay for one more unit of limited resource. Slack meaning what? We have more than what we need. Right.
I'll be leaving it at around 12.
Cut and stitch I did, no? Yeah, okay. No, I think with this I'll also finish now. So cut and stitch we did, right?
We did section C now.
I'm not going to repeat it. Did we do this one? Karaku. Seba chord of, we did that also.
Yes.
We did that also. Seba chord of. This one. Home electronics. No, no. Large appliance, small appliance. Not done, no? So we'll do that. Home Electrics Co. manufactures electrical appliances for domestic use. It is made up of two divisions, small appliance division. Two of the products manufactured by the small appliances division are the blender and the toaster. Now by the time I finish these revision classes, most of the questions of the study about I would have done. So please, when we are doing the revision classes, bring your doubts so that those doubts also we are automatically clearing and all of you all in the same page. So that means whatever you all did ask about, you all know how to do now. Correct? That's what I will assume. Okay. Small appliance division. Two of the products manufactured by the small appliances division are the blender and the toaster. The standard cost cards per unit for each of the products are as follows. Selling price, direct material, direct labor, variable overhead, fixed overhead, profit. In the first quarter of the year, the supply of the material was restricted to 2000 kilos per month. This was due to a global shortage. It is now April and it has been identified that material will continue to be limited to 2000 kilos per month, but also labor hours will be restricted to 3200 hours per month. The management accountant has supplied formulas for the production constraint as follows. Material 2B plus 3T equals 2000, y should be lesser than 2000. Labor 3B plus 5T should be lesser than 3200. Large appliance division. The division also manufactures two products, a freezer which is referred to as F and earns a contribution of 150 and a dishwasher which earns a contribution of 200 per unit. Both products use the same resources, several of which are in short supply. In April, only 4,000 labor hours, 2,500 material and 3,200 hours will be available. Machine hours will be available. The management accountant has applied linear programming and defined the following constraints. Material, labor, machine time and demand for D. 4 lines. Labor and machine time have been identified as the binding constraint and an optimum production plan of 240 units of F and 200 units of D has been calculated. What is the contribution per unit of limiting factor for product T in the first quarter of the year? What is the contribution per unit of limiting factor for product T in the first quarter of the year? This one the first quarter. What is the T's contribution? What is the T's contribution? Contribution for T is how much? Selling price minus the direct material minus the direct labor minus the variable overhead. What is the contribution? How much? What is the contribution per? Limiting factor. What is the limiting factor in the first quarter? In the first quarter of the year, material supply was restricted to 2000 kg per month. This was due to a global shortage. It is now April and it has been identified that material will continue to be limited at 2000 kg per month, but also labor hours will be restricted to 3200. The management accountant has supplied the following formulas. What is the contribution per unit of limiting factor for product T? The first quarter. What is the limiting factor? I think we have to identify. In the first quarter, they have told material was limited, no? So, okay, for tea, how many material do you need? To make 1 unit of tea, how many kilos of material do you need? $5 per kilo, $15, meaning 3 kilos, right? So, what is the contribution per limiting factor? 17 point? In the first quarter, they are asking in the first quarter, they are not asking about April, no? So, in the first quarter, that is only limited. Oh, it's wrong. Oh, sorry, I didn't put 3. I think they have asked for, so you will go wrong there also. They have asked for 2 dB. To the nearest whole dollar. No, sorry, the correct answer is 17. They have asked what? To the nearest whole dollar. So if I don't answer to the question, can you see what's happening? They have asked not to the first dB. When they ask first dB, you give first dB. They have asked nearest whole dollar. So we have to mark it that. You don't want a mistake like this in the exam, huh? Watch out. Good that I made that error. So you all know that this also, you all can go wrong. Using simultaneous equations, what is the total contribution to be earned from product B and T in April? So we have to find the optimum plan. They have said these are the constraints. Can you all use your calculator and solve the simultaneous equation? I hope you all have learnt it by now. Have you all? Okay, solve and tell me what is B, what is T. Solve the simultaneous equation.
D is 400.
T is
400. T is 400.
both 400.
Yes.
What is the contribution? Then at this optimum point they are asking, using simultaneous, what is the total contribution from B and T in April? No? For B, what is the contribution per unit? No, for we found for T, no, contribution is 50. For B, how much contribution? 80 minus 10 minus 21 minus 12. 80 minus 31 minus 12. 37. Double check. 37 into 400. 400 into 52. 35,600. Okay. Next one. Which of the following statements about the use of linear programming to solve limiting factor problems are true? The linear programming method helps to identify the optimum selling price of a product. That is pricing, no? Slack occurs when more than the maximum available of the limiting resource is required. What? Slack occurs when more than the maximum available of the limited resource is required. No. Slack occurs when more than the maximum available. They are saying if maximum available is 20,000, we need more than that. Then what is that? Is that a slack? That is scarcity. Slack is when we have more than we need. They are given the opposite here. Read carefully. Slack occurs when more than maximum availability is required. If that means they are saying we need more than what we have. Is that slack? No. Both are wrong, no? Both are wrong? I can't remember the first one. Yeah, both are wrong. What would be the shadow price of material in the large appliances division? Okay, they said what was the... Okay, here they have said labor time and machine time have been identified as the binding constraint. Correct? Labor time and machine time have been identified as the binding constraint. But they are asking you what is the shadow price of material? In the large appliances division, material was not a binding constraint. How did they solve the simultaneous equation? Using the labor and machine time equations. They got 240 and 200. So then how do you find the shadow price of material?
So you just add another one to material equation.
No. Listen, they have labor and machine time have been identified as the binding constraints. So they have taken these two equations and found the optimum solution. Solve and see. Solve this and see. And that is how they have found F equals 240 and D equals 200. How do we find the shadow price for material? We'll have to check and see whether this is coming to 240, 200, the optimum point. That no. So they have solved these two equations, which is labor and machine time. Now they are asking the shadow price for material, which is not in the binding constraint area. Is material a binding constraint? No. You have more than what you need, that means. So what is the shadow price for material then? Correct. 0. Can you see that? Because the shadow price will be for the limiting factors, which in this case was labor and machine time. Material was not a limiting factor, so there is no shadow price for it. Can you see how easy that is? Which of the following statements about the linear programming method in the large appliances division are true? Product D has a slack value. Product D has a slack value. Yeah, because that is also not in the D 250 demand. But wait, no, demand is 250. So we have only 200 units we can make, meaning demand is a slack extra. Contribution of 76,000 will be earned from the optimum production plan. Really? How do we know that? What is the contribution per unit of F and they have given? F contribution is 150, D contribution is 200. Calculate and see this 250 units of F into 150 per unit. 200 units of D into 200 per unit. See what is the total contribution coming to? With it's coming to that 76,000. $36,000. 76,000. Then that's correct. Contribution of 76,000 will be earned at the optimum point. Labor and machine time intersect at the optimum point if shown on a graph. Labor and machine time will intersect. So was all three correct? Yeah, all three are correct. Okay? Right, now keep better doubt. No? This question was home electronics school. I didn't give you all to copy anything because we could just do more questions in that time. No? Keep better doubt, no? This is very good. What was the question number again?
It was 100 money mine.
It was a little above in this, no? This, no? Okay, they have given Q1 and Q2 contribution per unit. Maximum demand for these products is 500 units per week for Q1 and an unlimited number of units per week for Q2. What is the shadow price of this material if materials were limited to 2000 kg per week? So shadow price is basically how much extra you are willing to pay for the material. Okay. Picks two products from the same raw material. Selling price and the cost details of these products are shown. So the direct material is currently costing how much? $2.
$2 per kg.
Yes, per kg.
So it's 3.
Shadow price. Material limited to 2000 kg per week. Direct material contribution.
So it's 3 plus 2.5y is equal to 2000.
Wait a minute. What is the shadow price of this material? Material limited to 2000 per kg. So if you have one more kilo of material, okay, contribution per unit is what here? 8. Okay, what is the contribution per limited factor? 8 divided by 2 is 4. The other one is 8.5 divided by 2 is how much?
0.5 divided by 2 is
Tell me those values. $8 contribution per unit. Okay, to make this $8 contribution, we use 2 kilos of material. So 1 kilo of material gave us a contribution of how much? Here also 2. Oh wait, no, this is not 2 kilos, sorry, this is $2 per kg. So how many kilos?
2 kilos.
No, not 2 kilos. $2 per kg. $2 per kg meaning how many kilos?
So for
One moment. There are two products, Kion and Kutvo. What is the contribution from Kion? $8 per unit. Here 8.5. Okay, now to make this $8 contribution, how many material kilos did we use? Here 3 kilos, no? By $2 into 3, 6. Here how many kilos? 2.5 kg. That means what was the contribution per kilo we made for Kion? 2.6 point for this. 3.4. Okay. So now they have said the maximum demand for this product is 500 units per week and an unlimited number of units per week for Kutvo. So we have unlimited demand for Kutvo. Now if we have more, if we get more, more material, what product will we make? Which product is giving us a higher contribution per limiting factor? Kutvo. So if we have more, we will make Kutvo. So if we are making more Kutvo from one unit of raw material or 1 unit of material, we are making more Kutvo. We will get how much additional contribution for 1 kilo of material? What is the additional contribution we can make when we make Kutvo? 3.4. So if we have 1 more kilo of material, we can make up to 3.4 additional contribution by making 1 more unit of Kutvo. So what is the amount then we are willing to pay? 3.4. Got it?
Yes, I use the other method, the long one. So to get this emergency equation.
No, you don't have to do that here. You simply have to see, okay, if we are making Kion, contribution per unit is 2.6. For Kutvo 3.4. If we have, now we are getting more contribution from Kutvo. So if we have more raw material, we are definitely going to put it there. Can you see that? So that is your shadow price. Any other doubts? Your doubts all did I clear? Or did I say limiting factor? I'll come back and I kept 1, no? What was that? 90? This one? An organization is experiencing a shortage of resources and has graphed a potential linear programming solution which shows its first product television on the horizontal axis and its other product tablet computers on the vertical axis. The ISO contribution line to solve the linear program is very flat and downward sloping. Which of the following statements is likely to be true for the company? The contribution per unit for tablet computers must be higher than that for televisions. The ISO contribution line to solve is very flat and downward sloping. Very flat and downward, very flat. They said what is in the horizontal axis, you draw only and see. They said the horizontal axis has television, correct? The vertical axis has tablet computers, correct? It's very flat and downward sloping, like that, the ISO contribution line. The contribution per unit for tablet computers must be higher than that for televisions. The contribution per unit for televisions must be higher than for tablet computers. The contribution per unit for each product is very similar. The contribution for each product must be negative. It can't be negative. What's the answer for that? A. That means the tablet computers have a higher contribution, correct? Yeah, so ISO contribution is very flat and downward sloping like this. Okay? On the horizontal axis, a potential linear program which shows its first product television on the horizontal axis and the other product tablet on the vertical. ISO contribution line to solve the linear program very flat and however downward sloping. Like this. Even more, let's take it more flat. Meaning what? Something like that, right? So the ISO contribution line, it will be like, it will be something like this. The gradient, you know, they will take, wait, this is the ISO contribution line. Okay. What do you use that? You see how the furthest point from that will be the optimum point, right? So here the contribution per unit of tablet computers is higher than that for televisions. One moment, let's take an explanation for that. What has the explanation said in the, read the explanation on the book. Now here basically this, listen carefully, this ISO contribution line shows the relative contribution of the two products. That means compared to this, what is the contribution of the other one. So because this is flat and downward sloping, it means the vertical axis has a higher contribution than the horizontal axis. A flat line implies that you give up, listen carefully, you give up fewer tablet computers to gain one TV. Let's say take like this. Okay, to one TV will be equal to, see, if you are making one more TV, you can give up so many more televisions. Meaning what? One tablet has enough contribution to cover for so many TVs contributions. That's what it means. A flatter line implies you give up fewer tablets to gain one TV, which may only make sense if tablets give up a more contribution. Basically, let's say this is moving from 4 to 6. Okay, so to make one TV, just by making one TV, you can give up two televisions. Meaning what? The contribution from one TV is one tablet is equal to the contribution from two TVs. So that means the tablet's contribution is higher. So basically the ISO contribution line shows you the relative contributions of two products. The relative contributions. So here if you are making one more tablet, you can easily give up two more televisions. Meaning what? One tablet's contribution is equal to two TV's contributions. So tablet has a higher contribution. Got it? Okay. That's a good question you cleared. Any other doubts you all have? Okay, pricing decisions, there are three different ways prices are set. I'm a little not well, you can see my eyes, no? But can't I have to do the class today, but I can manage it, just my eyes are red, I don't know. Three main approaches to pricing, there are three: demand based pricing, cost based pricing, market based pricing. Demand based pricing is when you decide on the price based on the demand your product has. I want to log into my ACCA, but the problem is they are asking for the touch ID. And can you also give me your number so I can call if there's anything? I can't sign it, they are asking the touch ID. Your time. Right. Yeah, so demand-based pricing meaning based on the demand your product has, according to that they price. Cost-based pricing meaning we calculate the cost of the product, to that we add a markup or margin and then find the price. Market-based pricing meaning we look at the market situation and based on the market situation we decide on the price. So before we decide on the price, first we have to consider certain factors like how sensitive is the product to a change in price. What is the price perception? What do customers think about different prices and how much are they willing to pay? Quality. What is the quality that sometimes customers they think, okay, a good quality product meaning the price can be high. So what is the quality of your product? What are competitors charging? How is inflation in your country? How new is your product? If your product is new, there are certain pricing methods that suit it, like price scheming, right? If price discrimination, yes. If it is like not something new, then you'll have to go with like say something like penetration or something like that. Even if it's new and if it's like some new products are unique, then we can go with skimming. If the new product is not that unique and you want to break the competition, then you go with penetration. That means you reduce the price and sell. What are the income levels in your country? How much people can afford? Product ranges that you are selling, and what are the ethics involved? Like, is it ethically correct to charge very high prices? Those things are there to consider. Demand-based pricing, we look at the price elasticity of demand. Price elasticity of demand meaning how responsive is demand to a change in the Demand equation, price equals A minus BQ. A is the price where demand is 0. At that price nobody will buy your product. Demand is 0. B is demand line. How do you find B? Change in price divided by change in quantity. Multiply by Q, quantity sold. So the optimum point generally happens where what? Marginal revenue equals marginal cost. To find the optimum point meaning the optimum price. We first see the demand line, we calculate the D. Then we have to match at profit maximization, marginal revenue equals marginal cost. What is the marginal revenue equation? A minus, only thing is different is 2. 2 into BQ. That we have to equate to the marginal price. Then we will first get the optimum quantity. Then we should take that optimum quantity, go back to the price equation and find the optimum price. But there are certain disadvantages of these models because we make a lot of assumptions when we calculate these models. Cost based pricing, there are 3 cost bases we can use: full cost, total production cost, or even the variable cost, right? So if it's full cost, we take all the cost, add a markup and get the selling price. So advantages, disadvantages of those things we have learnt. Opportunity cost pricing meaning we take the relevant cost and add a markup. I'm just roughly going here. Life cycle costing meaning we take the entire life cycle cost of a product and add a markup per margin. Market based pricing, you have skimming, penetration, complementary, product line pricing, price discrimination, relevant cost pricing, going rate pricing, we charge the going rate, or loss leaders. All are market based pricing. You all don't know anything in this, you all need me to explain? Or everything you all are aware with? You have to study the advantages and disadvantages. I am not going in detail because it will take a long time to do this itself. Today I said we will do pricing decision, make or buy, risk, uncertainty and budgeting. At least 4 areas if we cover for a day. Shit. Problem is that paper I want to do. Why is the internet slow? Let's do this section C question. No? Heatco specializes in the production of a range of air conditioning appliances for industrial premises. It is about to launch a new product, the Energy Buster, a unique air conditioning unit which is capable of providing unprecedented levels of air conditioning using a minimum amount of electricity. So with a little bit of electricity, they can give a lot of air conditioning. The technology used in Energy Buster is unique, so Heatco has patented it so that no competitors can enter the market for 2 years. The company's development costs have been high and it is expected that the product will only have a 5-year life cycle. Heatco is now trying to ascertain the best pricing policy that it should adopt for the Energy Buster's launch onto the market. Demand is very responsive to price changes and research has established that for every $15 increase in price, demand would be expected to fall by 1000 units.
If the company set the price at 735, only 1000 units would be demanded. The cost of producing each air conditioning unit are as follows. They have given direct material 42, labor they have given 12, and they have said 1.5 hours at $8 per hour. Fixed cost based on producing 50,000 units. That means total fixed cost they would have divided by 50,000 units to get 6. So total fixed cost will be what? 6 divided by 50,000. 6 multiplied by 50,000 to get the total. The first air conditioning unit took 1.5 hours to make and labor cost 8 per hour. A 95% learning curve exists. With this I will do the learning curve question as well. So again today we are doing the budgeting area. We don't have to do another learning curve question. Okay? You all know what learning curve is, no? When I am doing the answer, I will go back to that and just revise that. A 95% learning curve exists in relation to production of the unit. Although the learning curve is expected to finish after making the 100 unit, heat cost management have said that any pricing decision about the energy buster should be based on the time it takes to make the 100th unit of the product. The learning curve coefficient is B and they have given the amount. All other costs are expected to remain the same up to the maximum demand levels. Establish the demand function for the air conditioning unit. What is the demand function? What? Price equals? Price equals A minus BQ. How do you find B? What is the change in price? They said for every 15 change in price, demand will change by 1000. Something happened in the num-block stopped working. The keyboard is stopped working. Divided by 1000. So what is B?
0.01.
Okay. Do we know what is A? But we know a coordinate. We know that at a price of P, Q is 1000. Meaning using that we can find A. When price equals 735, quantity equals $758. Then, so how can we write the demand equation? P equals A 750 minus 0.015 Q. Correct? Calculate the marginal cost for each air conditioning unit after adjusting the labor cost as required by the note. That means we have to find the time it takes to make the 100th unit, because that is the time. Now here they have taken labor as 1.5 hours, no, but they have said that we have to correctly find the time it takes to make the 100th unit. That amount only we have to multiply by 8. Then only it's correct, they are saying. They have given direct material labor 42 plus 12. Then according to them, marginal cost is how much? 54 without the fixed cost. But that 12 they are taken 1.5 into 8. No, they are saying not to take 1.5 hours. They are trying to take the time it takes to make the 100th unit. Okay. So let's go to learning curve a little and go through that note as well. Quantitative aspects of budgeting. Quantitative aspects of budgeting. Okay, under that there is a area called learning curves. Learning curve meaning what? They say that as the output double, every time output doubles, the laborers they learn. So what will happen? The time taken reduces by the learning rate, right? So there are two ways we can find it. Generally they have given us an equation for the average time it takes to make x units. Average time. For that we use a x to the power b. What is a? Time taken to make the first unit. X is what? Cumulative number of units. Let's say 100 units meaning 100. So then we will find the average time it takes to make 100 units. To find total time we have to multiply by 100 units. Like that, okay? And they are saying after certain time you will learn, and after certain time the time will drop, and after a certain amount of output you won't learn anymore. It will become steady. Generally learning rate happens when there are laborers, right? It doesn't happen with machines, because machines they can do it well from the beginning, right? Before we do that, can you all copy this? Okay. Can you all copy this? Okay, so now let's do that learning thing. No? Now the first air conditioning unit took 1.5 hours to make and labor cost is 8 per hour. A 95% learning curve exists in relation to production of the unit. Although the learning curve is expected to finish after making 100 units, heat cost management have said that any pricing decision about the energy buster should be based on the time it takes to make the 100th unit. So then we have to find time it takes to make 100 units total time and also time it takes to make total 99 units. But there is no formula for total time, no. So we have to first find what? Average time. So first we have to find average time to make 99 units. How to find that? What's the equation? What's the equation average time? Y equals ax to the power. What is a time take to make the first unit? 1.5 hours, no? Into x 99 to the power minus 0.07 okay, what is y equals to? What is y equals to?
1.06.
1 point.
006.
Keep that full answer and multiply by 99 to see time 1.06, but it's some decimals, no?
Yes.
Keep that full answer and multiply by that full answer by 99. Total time to make 99 units.
105.69.
How much?
105.69.
106.
5.69.
Then average time to make 100 units. What does it come to?
It's also not less, like 1.06.
No. Take the full one here, otherwise it will go wrong. 178. Here it is y equals 1.0 676,115. Now keep this full amount and multiply by 100. Yeah, this full amount multiply by 100. Total time to make 9900 units. How much?
106.60.
106.67.
6.67. 68.
Then time to make the 100 unit will be what? This minus 0.99. Correct? 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 So the marginal cost will be direct material, same thing, 42, direct labor 0.99 into 8. $49.90. That's your answer. Got it? Now copy. So that's all you do for 6 marks. That's the marginal cost. Okay, done. Determine the optimum price and quantity to maximize profit. So that happens where MR equals marginal cost. So MR will be P equals 750 what's that equal? So P equals 750 minus 0.15 Q, right?
Yes.
So MR will be equal to 750 minus 0.015 into 2. So that will be 0.03. 2 into 0.015. 0.03. Q. Now we have to equate this to MR equals MC. That's where profit is maximized now. So 750 minus 0.03 Q equals 49.92. 750 minus 49.92 equals 0.03 Q. This is equal to optimum quantity. Using this, we have to go back to the price equation and find the optimum price. Meeting has been ended, no? Why? Tashra, I need that boy to come. So sorry for disturbing you because you're not there. Because the Zoom meeting ended. Can you ask him to come? Okay, that's the optimum price. Copy it down.
week class is also 5:30. Monday, next Monday there's a class now. It's also 5:30. Did you give your number? It's easy for me. What's your number?
What's the number?
4
4
4
199
1
999
999
400.
400. Your name is?
Akif. Can you give me a minute? There's another class happening right now. Yeah. 2 minutes.
Zoom is not working, that's why I'm waiting. You see, told me to wait, somebody else has logged in. So we have to wait till they fix it. I don't know who is watching on Zoom, but still.
Recording in progress.
Go cancel. Okay. So did I copy the note all finished now? Explain what is meant by a penetration pricing strategy and a market skimming strategy, and discuss whether either strategy might be suitable for HeatCo when launching the energy buster. So let's see the answer. Penetration. With penetration pricing, a low price would initially be charged for the energy buster. The idea behind this is that the price will make the product accessible to a large number of buyers, and therefore the high sales volumes will compensate for the lower prices being charged. A large market share would be gained, and possibly the energy buster might become accepted as the only industrial air conditioning unit worth buying. Circumstances that would favor a penetration pricing policy. Height, so they are telling when it will be suitable. When will penetration pricing be suitable? Highly elastic demand for energy buster, that is the lower the price, the higher the demand. The preliminary research does suggest that demand is elastic. So if demand is elastic, then it's good to go with penetration. While lower the price, higher will be the demand. If significant economies of scale could be achieved by heat, higher sales volume would result in a sizable reduction in the cost. If they can achieve economies of scale, that means they can sell at a low selling price. This is not the case here, since learning sees us at 100 units. If heat was actively trying to discourage new entrants into the market, in this case new entrants cannot enter the market anyway because of the patent. If heat wished to shorten the initial period of the energy buster's life cycle so as to enter the growth and maturity stages quickly, we have no evidence that this is the case for heat, although it could be. From the above, it can be seen that this could be a suitable strategy in some respects, but it is not necessarily the best one. So they are saying it could be a suitable one. Why? Because of two things. One, they have said it's elastic demand, but it doesn't have economies of scale because they are only making 100 units, right? If heat was actively trying to discourage new entrants into the market, in this case new entrants cannot enter the market because of the patent. So there is no new entrants also, right? If heat wished to shorten the initial period of the energy buster's life cycle as to enter the growth and maturity stage quickly, if they want to do that also, they can go with penetration pricing. By quickly they can sell more. We have no evidence that this is the case. Maybe this is not most suitable for them. Although there is elastic demand, they have a patent, no. Right, from the above it can be seen that this could be suitable in some respects but not necessarily the best one here. Market skimming. With market skimming, high prices would initially be charged for the energy buster rather than low prices. This would enable him to take advantage of the unique nature of the product and so maximize sales from those customers who like to have the latest technology early as possible. Conditions most suitable for this strategy. The product is new and different. This is indeed the case with the energy buster. The product has a short life cycle and high development costs that need to be recovered quickly. The life cycle is fairly short and high development costs have been incurred. So if they charge a skimming, they can quickly recover the money. Since high prices attract competitors, barriers to entry are needed to deter competition. In each case, there is a barrier since it has obtained a patent, so no one can enter. The strength and sensitivity of demand are unknown. Again, this is not the case here. Once again, the energy buster meets only some of the conditions which would suggest that although this strategy may be suitable, the answer is not yet clear. The fact that high development costs have been incurred and life cycle is fairly short are fairly good reasons to adopt this strategy. However, although demand curve data is available, its reliability is not known. A skimming strategy may be the safer option. In this case, overall when we look, because of some key points like they have patent, they have a high development cost and short life cycle, so they quickly take the money back, recover the money back. So when we look at those points, we can say that skimming is better. So we have finally, when you are giving your answer, you have to give a valid point. Because of this only, this is the answer. Because you looked at penetration and you saw what are the reasons. You have looked into that also. Penetration, is it suitable? They checked in some using some measures. It has high elastic demand or not. Can we achieve economies of scale or not? Right? And are we trying to discourage new entrants? No, because there can't be new entrants since there is a patent. Like that, they first looked at penetration pricing, whether it's good or not. Then after that, they went to skimming and saw whether it was good or not. And finally, they made a decision based on the most important points. So that to get the 8 marks. You'll see how they've answered that. Okay. Then, after pricing decision, what's the next area? Make or buy or other relevant and other relevant decisions, no? So make or buy, we use relevant costing principles. There are some decisions we make. Do we outsource or not? We have to consider the cost of outsourcing and the cost of making in-house. Whatever is cheaper, we will do that. Right? Then make or buy, we have to see the cost of making and we have to compare with the cost of buying. If making is cheaper, we will make. If buying is cheaper, we will buy. shutdown decision, we will see, okay, what is the contribution lost. If we shut down, what is the contribution we are losing. We will compare it with the fixed cost saved. That means if we shut down, what is the fixed cost we will be saving. If the contribution lost is greater, we should not close. Why? There is a high contribution, so we should keep it running. If the fixed cost saved is greater, we are saving lot by closing, then we should close it. One-off contract, we have to compare the contract price with the relevant cost. If the contract price is greater, we will accept. Joint products, we will consider the incremental revenue with the joint products and further processing. Whether to further process or not. We have to say, okay, if we further process, what's the incremental revenue we get? And if we further process, what's the incremental cost? Compare the two. If the incremental revenue is greater, we will further process. If the incremental cost is greater, then no point further processing. Okay. Thing is that make or buy areas, they do it together with relevant costing. We already did the other day. It won't come separate, it will come within relevant costing. Did we do stay clean? No. It's a good question to do. Here they have said calculate whether or not it's worthwhile ceasing to produce the TD now than waiting for 12 months. Have we done that? No. Stay clean we didn't do, no? We did bits and pieces the other day. Stay clean we didn't do, no? It's a good question to do. Okay. Stay clean manufactures and sales. Stay clean manufactures and sells a range of kitchen equipment. Specifically, the product range contains a dishwasher and a washing machine and a tumbler dryer. The tumbler dryer is one of the rather old design and has for some time generated negative contribution. It is widely accepted that in 1 year's time, the market for this design of tumbler dryer will cease. As people switch to a washing machine that can also dry clothes after the washing cycle is completed. Now they have a tumbler dryer, that means you take the clothes out of the washing machine and you dry. Now they have introduced a washing machine where inside that itself you can dry the clothes. In most of the cool countries during winter, that is what they use. But generally I think they now must be having the washing machine itself, it will wash and inside that itself it will dry. There are two machines generally, a washer and a dryer. They'll wash and they take it out and put it in the dryer. But now they've incorporated together. They are maybe now together. We don't use here. Here we don't use the dryer because here we have sun in our countries. We can put the clothes out to dry. But in countries where there is winter, they can't put the clothes out to dry, no. So they generally use those machines. We don't use it much here, I don't think. Maybe some use it, but generally people dry their clothes outside. Right? Then they said it's widely accepted that in 1 year's time the market for this design of TD will cease as people switch to a washing machine that can also dry clothes after the washing cycle has completed. Stay Clean is trying to decide whether or not to cease the production of TD now or in 12 months time, when the new combined washing machine dryer will be ready. To help with this decision, the following information has been provided. The normal selling price, annual sales volume and total variable cost for the three products are as follows. DW, WM, TD. Selling price, material cost per unit, labor cost per unit, contribution per unit, annual sales. It is thought that some of the customers that buy TD also buy DW and VM. It is estimated that 5% of WM and DW will be lost if TD ceases to be produced. So if you don't make TD, even DW and VM sales will drop. All the direct labor force currently working on the TD will be made redundant immediately if TD is ceased now. If they cease now, all the direct workers who are working there will be made redundant. This will cut 6,000 in redundancy payments. If Stay Clean waited for 12 months, the existing labor force would be retained and retrained at a cost of 3,500 to enable them to produce the new washing machine dryer. If they are waiting for 12 months, what they will do is, if they are waiting for 12 months, they will make, if they stayed for 12 months, the existing labor force would be retained and retrained at a cost of 3,500 to enable them to produce the new washing machine. Recruitment and training cost of labor in 12 months would be 1,002 in the event that redundancy takes place now. That means if they make them redundant now, in another 12 months they have to recruit now. That will be 1,200. Stay Clean operates a just-in-time policy, so all material costs would be saved on TD for 12 months if TD production ceases now. Equally, the material costs relating to the lost sales on the VM and DW would also be saved. However, the material supply has a volume-based discount scheme in place as follows. If you buy more than 960, 5% discount. 900 to 960, 3% like that. Stay Clean uses this supply for all of its material for all the product it manufactures. The figures given above in the cost per unit table for material cost per unit are net of any discount. Net of any discount meaning what? After discount. Stay Clean already qualifies for. The space in the factory currently used for TD will be sublet for 12 months on short-term lease contract if the production of TD stops now. Rental income will be 12,000. The supervisor, currently classed as an overhead, supervises the production of all three products, spending approximately 20% of its time on TD production. He would continue to be fully employed if the TD ceases to be produced now. Calculate whether or not it is worthwhile ceasing to produce the TD now rather than waiting 12 months. Whether or not worthwhile ceasing to produce TD now. So if they cease to produce it now, let's see what is the relevant cost. We have to calculate relevant cost of closing TD now. For the light, the eye is hurting more. Relevant cost of the decision to cease TD. Okay, so if they stop making TD, first and foremost, all of TD sales will be lost. So we have, if they stop making it now for 12 months, we will lose all the sales, right? So lost sales, it's a relevant cost. It will be what? Selling price per unit 80, annual sales 1,200. So they will lose this. That's a relevant cost. Why? Because it will be lost. Correct? Okay. Then they will also not buy the other product, right? Yeah. Okay. Yeah, that will also be affected. For that they said 5% and 10%. And they also mentioned both 5%. They told you here Stay Clean operates just in time, and so all material costs would also be saved. on the TD for 12 months if TD ceased now. Equally, the material cost related to the lost sales on VM and DW would also be saved. That means, what is the selling price of DW? 200. Material cost 70. So altogether, what's our income there then? Sorry, contribution if you go to calculate. What about the labor cost per unit? That also we will save, right? What do they say about the labor cost? As the all direct, if they made it, if they stop TD, all the direct labor force currently working on TD will be made redundant, right? Let's not do it there, let's do it the way we do, otherwise it get confusing. Okay, wait a minute. Let's see that 5%, it's estimated that 5% of WM, DW will be lost. And the material cost also they will be saving. Okay, let's take the lost sales below.
I think what we can do is sales minus material, we can take the cost contribution.
Yeah, but then no, for material there will be a different saving. We can't do that because material there is a discount calculation that we have to do. So material, that's what I was trying to see whether we do material first or that first. One moment. No, let's just go according to this, okay? Material cost will deal with it later. Labor cost per unit, the savings of labor. What will be the savings for labor? All the laborers who are working for TD will stop working, right? That's what they have said. So saved labor cost will be $1,200 units into, this will be a saving. So it's a plus. Correct? Then contribution per unit is given. Now let's calculate that 5% of sales of WM and DW. All the direct labor force currently working on TD will be made redundant immediately if TD ceases now. This would cost 6,000 in redundancy payment. We have to add that, no? That's also a cost. Redundancy payment. Because if they stop making this now, we have to pay the redundancy payment. What else? Let's finish that paragraph. If Stakely waited for 12 months, the existing labor force could be retained and retained at a cost of 3,500 to enable them to produce the washing dryer. Recruitment and training cost of labor in 12 months time would be 1,200 in the event that redundancy takes place now. So that also we have to pay, right? Because we are making them redundant now. Later we have to recruit at a cost of how much? 1,000? We'll come to that material saving later. Stay clean operates. Now only we are coming to that. Stay clean operates a just-in-time policy, and so all material costs would be saved on TD for 12 months if TD production ceases now. Equally, the material cost related to the lost sales on WM and DW would also be saved. However, the material supply has a volume-based discount. Can we see how much current material cost is? Current, let's do a working down here. No? To see how much they are saving on the discount or how much extra they have to pay. Okay, now let's say if they are operating all three, what is their total material cost? What is the current material cost? 70 into, they said this is net of discount, no? Meaning after discount. 70 into 5,000. 100 into 6000. 50 into, so what is the total? Okay, this is after discount. Okay, after discount it is 101 million plus. That means they would have got a 5% discount, no? Because after discount itself it's 101. That means before discount it would have been greater. What would have been the amount before discount? This will be 95%, right? So what will be the amount before discount? %5 discount. Correct? What would have the discount been? Earlier we would have got this discount, correct? Now let's see what will be the current material cost. So sorry, this was the previous material cost. Current material cost will be, they said 5% of sales of WM and DW will be lost now. So see how many units will be lost. Earlier 5,000, in that 5% will be lost. That's the current sale for that. And will there be any sales for TD? No. So what will be the material cost? Current also we have, if we are taking 70, we are taking the before discount, after discount amount. 70 material cost is after discount amount, no? So even if you are finding, here it will be for 95%. Then we have to convert that to 100 and see how much. After that apply the new discount. Into 70. Now these amounts were, okay, this was again 95% rate amount, now we are finding. Correct. But it's what? This is 95%, so what will be the 100% here? Why am I saying it's 95%? Because that's 70, 100 and all after 95% discount. Correct? It's 950,000. Now for 950,000, what's the discount we will get? 900 to 960. 3% discount. What's the discount we will get then? $28,500. So when we are ceasing this production, how much discount are we losing? How much discount are we losing? Yeah. And how much material cost are we saving? Okay, so how much will we end up paying? So what is the material cost we are saving? 88,500. Can you see that is the material cost we are saving? 88,500. How did we get that? This was the old amount we paid. This is the new amount after the 3% discount. Got it? After the 3% discount, that's the new amount that we will be paying. So what is the saving in material cost? 88,500. It also includes the savings for that lost sales. So we don't take that material cost separately. Got it? That's why I said don't take it with the contribution there. So material cost saving is how much? It's a plus, correct? Material cost saving is a plus. I have one thing more to take. I did not take that lost sales revenue for DW and VM, that 5% sales and labor cost saving still I didn't take, because for that also we will save the labor time, no. That lost sales 5% meaning how many units? 250 units here. That sales revenue loss I did still take 300 units here, okay? Shall we take that first? Okay, we will take that first, or shall we finish everything and come to that? We finish everything and come to that. Then material we took. Okay, the space in the factory currently used for TD will be sublent for 12 months on a short-term lease contract if the production of TD stops now. So if we stop now, we will get a rental income of how much? Rental income of how much will we get? 12,000, it's a plus, right? Then the supervisor, currently classified as an overhead, supervises the production of all three products, spending approximately 20% of his time on TD. He would continue to be fully employed if TD ceases to be produced. So there is no change in his salary, no. So what's the relevant cost? 0. Now we have to take that lost sales. Lost sales of sales revenue lost from DW and VM. That shall we quickly do the calculation here. $250 units into 200 300 into 350, and also labor cost will be saving, no, for that labor cost saved. So total lost contribution we can take here. Contribution we are calculating only based on what? Only based on the labor cost. Material we are not taking. By material cost already we calculated it at 88,500, big calculation. So this is the revenue lost minus this amount plus the saving. Lost contribution. So total contribution loss from the other two products 118,500, yeah, minus 188. Have I included everything? $73,200. It's minus. So if we close now, it's a loss. So should we close? No, wait, I have missed something. What did I miss? 96 voltage minus 3,700. Our retraining saved. Now, okay, one thing I have missed. Because we are paying the redundancy and we are recruiting staff 1,002. But because we are closing now, we are saving that 3,500. No, we don't have to retrain the staff. No, can you understand? So there is a saving in retraining cost. Because we are training them, we are putting them out, we don't have to retrain them, no. So that cost we are saving. How much is that? 3,500. So it's a savings, a plus. Minus, but still it's a minus, right? And then should we close now? Then no, we should wait for 12 months, because if we are closing now, it's a loss. Can you copy that? Can you see this? Can't see, no? I'll make it full screen. First copy this video, then I'll scroll down. After I'll copy this, you all go and pray and come. After that, we'll continue. After I copy this, we'll take the break. it. Okay. This was the 5% discount. Now we have to find again the Okay, if you are done, you all can go for the break. Okay, and then after the come around 7:30. And we'll continue. Yeah, there you I have not finished yet. No, I have not finished. 8 on. You're going to. Huh? Okay, let's continue this question itself. Explain 2 pricing strategies that could be used to improve the financial position of the business in the next 12 months, assuming that the TD continues to be made in that period. They said 2 complementary pricing. Since the washing machine and the tumbler dryer are products that can tend to be used together, Stay Clean could link their sales with a complementary price. Instead of closing down TD, they can probably sell it along with the washing machine at a low price. They could offer customers a discount on the second product bought. So if they buy a TD for 80, they can get a VM for 320. Overall, then Stay Clean makes a positive contribution. Product line pricing. All the products tend to be related to each other and used in the utility room or kitchen. Some sales will involve all 3 products. Example, if customers are upgrading their utility room or kitchen, a package price could be offered, and as long as Stay Clean make a contribution on the overall deal, then they will be better off. All the products they can say they are saying to give in a package price. Next question. Briefly describe 2 issues that Stay Clean should consider if it decides to outsource the manufacture of one of its furniture products. So if they are outsourcing, what do they have to think of? Outsourcing requires consideration of number of issues. Only 2 you have to talk about, not all. Huh? The cost of manufacture should be compared to the cost of buying in from the outsourcer. If the outsourcer can provide the same products more cheaply, then it is perhaps preferable if he can give it cheaply. The reliability of the outsourcer should be assessed. If products are delivered late, then the ultimate customer should be disappointed. This could damage the goodwill of the brand. So, will the outsourcing company deliver on time? Are they reliable enough? The quality of work that the outsourcer produces needs to be considered. But how is the quality is providing good enough? Cheaper products can often be at the expense of poor quality of material or assembly. Is the outsourcing company making the product same as the quality that we are making at? The loss of control over the manufacturing process can reduce the flexibility that Stay Clean has over the current production. If Stay Clean wanted, say, to change the color of the product, then at present it should be able to do that. Having contracted with an outsourcer, this may be more difficult or involve penalties. When they take an outsourcer, their flexibility may reduce. Currently, they may be able to do whatever they want, alter the products however they want. But once they go in contract with the outsourcer, they may not be able to do that. So that's another thing they have to consider. Then what's the next area? Risk and uncertainty. Okay. Again, we have class this Saturday. After that, next Monday. Have you all got any doubts today? Have. Send. What's the doctor saying? Pricing decision question, no? Okay, we'll look at that later. Dealing with risk and uncertainty in decision making. Risk is not the same as uncertainty. Risk, we kind of know the probability and the possibility of events happening. Uncertainty, we have no idea. The three different kinds of risk managers. Risk seeker, he doesn't care, he goes for it, right? He's called max manager. Risk neutral, he doesn't want to take too much risk, nor does he want to be too safe. Neutral. So he goes by what? Expected value. Whatever has the highest expected value. Risk averse meaning they don't want to take risk. Either they will go maxi-min or minimax regret. They don't want to take regret. They don't want to regret. So with the payoff table, minimax regret, how do you calculate? You have to see every situation what's the best. Like for example, if demand turns out to be 40, if you had supplied 40, it's the best. But if the demand was 40 and you had supplied 50, how much do you regret by? Now you are making 0, no, so you are regretting by 80. If the demand was 40 and you supplied 60, you are making minus 80. So you will regret by how much? This minus 80 plus the other 80, 160. Remember? Right. Expected value, how do you calculate? The outcome into the probability. Outcome into probability, outcome into probability, and total that up. You all know, right? Value of perfect information, how do we find? Expected value with perfect information minus the expected value. That means if you had perfect information, what would have the expected value been? The perfect situations. Minus without perfect information, which expected value you would have selected. That is the highest one, no, out of the lot. Without perfect information, out of the lot, you would have selected the highest one. Correct? So the perfect information minus the expected value without a perfect information. Then you get the value of perfect information. Decision trees are also used when you are making decisions. And there is sensitivity analysis where you see how sensitive a certain variable is to the what? Profit. Right? So price, sales price sensitivity, variable cost sensitivity, all these formulas you have to learn. It's not very difficult. Simply you take that profit amount and divide by the cost, or if it's a cost, variable cost, fixed cost divide by fixed cost, sales revenue divide by sales revenue, right? Total sales, or if it is sales volume, you have to divide by the contribution. Stimulation, you will not be tested, you will just have to know what it is, right? Focus groups are when you make them discuss in groups about, like, in order to reduce the risk and uncertainty. We make like experts discuss what they think might happen. And also in order to reduce the risk and uncertainty, we can do what? Market research. Any doubts with that area? This sensitivity formulas, all that you all have gone through. You have to remember those formulas, it's not hard. Just the profit divided by that. But remember, sales sensitivity is total sales. Sales volume is what? Contribution. Right, this required increase in variable cost, required decrease in sales is always what? That profit amount only. No? To make the profit 0, can you remember? How much does sales have to reduce by to make the profit 0? So that is basically the profit amount only. You would have done it, no? You all know, right? Right, let's go to a question. Did we do this store hotel? No. The managers of store hotel are trying to decide on their pricing strategy for the next financial year. Occupancy levels depend on the price charged, and the managers are trying to decide between charging 180, 200 and 220 per day. The variable cost of running the hotel are uncertain. Due to fluctuations in the price of food and energy, cost may be high, most likely or low. The management accountant has produced the profit table, a pair of metrics, summarizing the possible levels of contribution for each product price charged. The probabilities of variable cost levels occurring at the high, most likely and low levels are estimated at 0.1, high 0.1, most likely 0.6, low 0.3. Match the fee that should be chosen by the maximax and maximing decision makers. Maximax will go with what? You all tell me. Highest out of the highest. Which is what? 1706, meaning what is the fee? 1733. So what is the fee? 180. Maximin, he will select what? The best out of the worst. So at 180, what's the worst? 1339. At 200, what's the worst? 1378. At 220, what's the worst? 1313. Out of the worst, what is the best? 1378, right? So you will go with 200. What are the expected values of contribution for each pricing strategy? How do you do that? For 180 it will be 0.1 into 1339 plus 0.6 into 1496 plus 0.3 into 1733. For each pricing option you have to find the expected value. This actually risk and uncertainty is very easy. It's very easy. If you know how to do the regret table and all, it's very easy when it comes to MCQs. You all tell me the total amount. How much is that? How much is that coming to? Tell me the total amount. How much?
1,500.
1551.4.
They are saying nearest what? Just one DP. They have rounded up, no? Tell me the total amount here. 550? 55. So what's the answer then? B. B, no? Yeah, because you don't have to calculate the other one, right? But I can't select no the answer. B is the answer there, we just can't select it here. What are the regrets for each fee strategy for the low level of variable cost? Here they have given for the other, they have calculated the regret table here. The management accountant started to calculate a table of regret but did not complete it. The table is missing the regrets for the low level of variable cost. So they just want us to do the last line. That also we can't select the answer. At the low levels of variable cost, what is the best outcome? 1733, no? So 180 option is the best. So there will be zero regret, correct? Then 200 option, there will be a regret of how much? 1733 the best option minus 1706. 1733 best option minus 1778. So what is it? It's 0, 27, 158 D, but we can't select. The management of store hotel are risk seekers. Which decision making technique is appropriate for risk seekers? Maxi? Maxi. Identify selecting the relevant box in the table whether each of the following statements regarding the use of expected values in decision making is correct or incorrect. They accurately reflect the risk associated with each decision. They are more appropriate for actions that will be repeated many times. Yes or no? They may be unreliable as the probability is used as estimates. They are used by risk neutral decision makers. You all tell me now, you all tell me the answer. They accurately reflect the risk associated with each decision. Will it be 100% accurate? The risks associated, so you all are saying it's incorrect. They are more appropriate for actions that will be repeated many times. Expected values are averages, so it's good for actions repeated many times or not?
Yes.
Good, okay. They may be unreliable as the probability is used as estimates. It's estimates, so it's unreliable, you're saying, okay. They are used by risk neutral decision makers. Expected values will be used by risk neutral decision makers, yes or no?
Yes.
I don't know, you are telling. Okay, correct, good. They are unreliable as the probability is used as estimates. They will be used by risk neutral decision makers. That's correct. Okay. Then what's the next chapter? Budget. Okay, with budgeting, it's a very theory-based area, this first part of budgeting. Then we learn different types of budgets. Can you remember budgets are used to plan, control, motivate, communicate and assess performance. Right? There are different kinds of budgets. Rolling budgets, how does that happen? You plan for when one quarter elapses, you will plan for the next quarter. Every time there should be one, like a set periods budget, a yearly budget, for example. So, incremental budget meaning what? You take last year's budget and slightly increase it for this year's inflation and like whatever you know has increased. Zero based budgeting, how? You do it right from the start, fresh budget, right? And for that you have to do like decision packages, you have to like see whether this, you take like you put different expenses in different decision packages. Then you evaluate that package. What are the benefits of spending for this? What are the drawbacks? Which one we should spend, which one we should not spend? We should rank it also. And then decide what we are going to allocate the money for and what we are not going to do. Right? So it will be a good base of budgeting, but it will take a lot of time. Activity based budgeting is about, you think, okay, if we reduce the activities, let's say the number of deliveries, if we reduce it, automatically the overheads will reduce. If you reduce the number of deliveries, the total delivery cost will reduce, right? So that's how they budget, based on activities. Feed forward control is before something happens, you try to control that and make sure it doesn't go wrong. Feedback is after something happens, you see what can be done in the future or what went wrong. Closed loop system meaning it's reactive rather than proactive, meaning what? A closed loop system is any system with feedback. There is feedback coming. That's a closed loop. There will be a standard, meaning the budget. A sensor will compare. Sorry, the sensor is what? The actual data. Comparator will compare the standard with the sensor. Wait. The standard is the budget. Sensor will collect the actual data. Then the comparator will compare your budget with the whatever is collected from the sensor. Right? And the effector will take the control action. So that in the future everything goes smoothly. Open loop system meaning what? There is no feedback. Feed forward is before something goes wrong, you try to take the corrective action so that nothing, your budget can be met. So you know there are different kinds of budget: master budget, functional budgets, fixed budget, flexible budgets, right? You know that when you are preparing budgets, there are two ways. You can either make your staff participate, or you don't have to get them to participate. What are the two styles? Top down, you set the budget and you push it on to them. Bottom up meaning what? You make them participate in the budget setting process. It takes time, but it can be motivating. But you know, it's only useful when you have some skilled staff. Upward style, there are several styles also. Some managers are only concerned about the budget. Some are saying profit. That means as long as we make profit, even if you spend more, it's okay. Some don't care about the money. They only think about customer satisfaction and reputation and those things. So they don't mind spending whatever they can, right? Traditional budgets were prepared traditionally like we normally do the cost budgets and things like that. But there are some drawbacks. Why? Because when we prepare the budget, we prepare it 1 year back. So we don't know actually in 1 year's time that planning, the predictions we make, environment may change. So budgets may become outdated very fast. Time and cost it takes. And we were generally focused on cost control and cost reduction. But we were not thinking of actual performance and things like that. Because we were thinking too much about the budget, the quality of the product could have been compromised with traditional budgets. Stifle innovation meaning because we are so much sticking onto the budget, new ideas and innovations we may not spend our money on. Those are the drawbacks with the traditional budgets. And there could have also been dysfunctional behavior. Management wants one, staff want another one. Management want to keep costs low, staff want to get more salaries, for example. Concept of beyond budgeting, here you look beyond budgeting. You don't only do budgeting, you look beyond that. Meaning you don't only have budgeted targets. Now for example, that exam rates we talked about. We don't at the beginning itself we don't say this is the target or this is what we are looking for. What we do is we will wait till the final exam and then we will decide. Based on the situation, the budgets or the planning and what we require may change. Right? So beyond budgeting also there is benefits because it's a more modern style of budgeting, right? Benefits: jointly decide the dimensions. It removes having firm targets which as we have discussed can be demotivational. It also encourages responsiveness to the environment. We respond according to the environment. What we expect will change according to the environment. Rather than trying to adapt behavior to hit a arbitrary target. We are not trying to meet something impossible. We are changing our targets based on the situation. So staff can easily reach it. Overall, it should encourage the best possible performance in the circumstance. Drawbacks: there is a lack of objectivity, perhaps given the interpretation of performance is purely centered on opinion in relation to the environment. Now, when the environment is changing, we are changing our target. No, that changing of target also, lot of people are giving their opinions. Based on that only we are changing the targets. So that opinions may be incorrect sometimes. Then that new targets also may be not 100% correct. Right? Other stakeholders may require forecast information to help them plan and make decisions. Often this information is based on budgets. However, in a beyond budgeting environment, it's less likely to be available because you don't have a budget. You are waiting for the situation. So if anyone wants to plan ahead, they don't have data. As with any change, there is likely to be resistance from people who prefer the status quo. Change requires resources, time and money that may be short in supply.
Okay, let's do this. With this question, we'll stop, okay? It's very difficult for me with the I. And I think it's already 8, so by the time I finish it will be 8:30. Give me 1 minute. Yeah, around 8:15, 8:20, I'll finish. Right.
Northland's major towns and cities are maintained by local government organizations which are funded by central government. The LGOs submit a budget each year that forms the basis of the funds received. You are provided with the following information as part of the 2003 budget preparation. Administrative overhead costs are budgeted by taking the previous year's actual expenditure and adding a set percentage to allow for inflation. Adjustments are also made for known changes. The details of these are you can see that property cost 220,000, known changes, they don't have any changes. There's inflation between the years of 5%. Central wages 150,000, note 1. One new staff member will be added to the overhead team. This will cost 12,000 in 2003. So to the 150 we have to add a 12,000 and then increase by 3%. Stationery 25,000, note 2. A move towards the paperless office is expected to reduce stationery cost by 40% on the 2002 spend. Meaning we have to take 25,000 into 60% and then there is no inflation there, so nothing to increase. Road repairs in 2003, 3,200 meters of road will need to be repaired. The total cost of road repairs for the previous 4 years, which include variable and fixed costs, was as follows. Meters of road repairs 2002, 2001, 2000, 4 years they have given. Total meters of road repair and the total cost also they have given. Local property tax. One of the LGOs deals with the administration of a local property tax. The manager of this department wants to introduce activity-based budgeting. One of the activities that his staff are involved in is dealing with inquiries from taxpayers. The driver for this is the number of inquiries, which is expected to be 28,800 per year. There are 15 staff who handle inquiries. Staff cost for dealing with such inquiries is $20,000 per year per member of staff. A team supervisor is also employed at a cost of $35,000 per year. Each member of staff and the supervisor requires a computer terminal which is leased at a cost of $200 per terminal per year. We will read that when that question comes, we will look into it detail. Accounting service. DEFCO provides accounting service to LGOs in Northland. On average, each staff member works 6 chargeable hours per day and spends the rest of their working day on non-chargeable admin work. One of DEFCO's main objective is to produce value for money for its customers. What is the total budgeted admin overhead for the year 2003? That means we have to add all these 3 costs after adjusting. Can you all do it and tell me the answer? 120,000 just increased by 5%. Central wages 150,000 plus 12,000 and then increased by 3%. Stationery 25,000 reduced to 60%, that is by 40, and nothing to increase. Okay, are you all done?
Yes.
How much did you all get?
18,160.
You all did what I did, right? 3 lakhs?
18,160.
No, it's not there. No. Did you take 25,000 into 60%?
Yes.
Admin overheads are budgeted taking the previous year's actual figure and adding a set percentage to allow for inflation. Adjustments are also made for known changes. There's somewhere you all have gone wrong.
150,000 plus 3% plus 12,000.
Yeah. One new staff member will be added to the overhead team. This will cost 12,000 is 3,000, 2003. So 150,000 into 3%. After that, we have to add the 12,000. For the 12,000, don't need to add 3%. Yes, because that will, they have sold, it will cost 12,000 in 2003. Can you see that? So that we don't have to add the 3%. That is already with the 3%. How much? How much? How much? Still answer is not there. I think first one meaning. What is the answer coming to?
29.
So that is the answer, no? Wrong. What did you do? It's not I told you to do. 120,000 into 5 into 1.05. 150,000 into 1.03 at the 12,000 and 25% reduced to 60%. 120,000 into 1.05 with the 5%. 150 into 1.03, that is increase the 3% at the 12,000 and 25,000 reduced by, that is reduced to 60%. Correct? No, there is no inflation for that. Where did you go wrong then? I told that, no, then still you added the 12,000 and did.
I multiplied by 150,000 into 3% and
Yeah, that way they also have done.
I got the answer.
150,000 increased by 3%.
Plus 12,000.
So you are getting 166,500. What did you get then? See why you have gone wrong. See why your amount is different. But where did you go wrong? Did you get this amount? You got the correct amount. You also got the correct amount. I think his calculation has gone wrong. No?
Calculation.
Yeah, that's it. What should be the budgeted cost of road repairs for the year 2003 assuming no inflation? In 2003, 3,200 meters of road will be repaired. The total cost of road repairs for the previous 4 years, which includes variable and fixed costs, was as follows. Okay, so they have given different activity levels and different units. Like, what do you have to use here? What do you have to use here? No. What do you have to use here? For 3,500 meters, total cost was 52,500. For 2,000 meters, total cost 37,500. For 2,500 meters, total cost 43,000. For 3,000 meters, total cost 47,000. See whether it's purely variable or fixed or what. Is it semi-variable cost what? They are asking how much for 3,200 meters. But what is the method we should use? What is the method we should use? High-low method. High-low method. So cost you have to take the cost at high activity level, cost at low activity level. What's the highest activity level? 3,500. What's the lowest activity level? 2,000. Then we have to find the variable cost first. Then we have to find the fixed cost. Then we have to take an equation. After that we have to see for 3,200 meters what is the total cost. Okay, do the same. Do at the same time as me. This is different years, different activity levels. We have to select the highest activity and the lowest activity. What's the fixed cost? How do we find? Any activity level we can choose. Total cost minus variable cost per unit into the activity units. I am taking the highest activity level. So I am taking total cost and minusing the variable cost out. Total cost minus total variable cost. So fixed cost will be So what is the total cost then in 2003? 3,200 meters have been driven. Fixed cost 17,500 plus 3,200 meters into 10. $49,500. The manager of LGO that deals with property tax has asked you to help with the budget for inquiries from taxpayers using the activity-based budgeting. What is the budgeted cost of one inquiry? Okay, let's read it. One of the LGOs deals with administration of local One of the LGOs deals with the administration of local property tax. The manager of his department wants to introduce activity-based budgeting. One of the activities that his staff are involved in is dealing with inquiries from taxpayers. The driver for this is the number of inquiries, which is expected to be 28,800 per year. The driver for this number, which is expected to be Okay, there are 15 staff who handle inquiries. Staff cost for dealing with such inquiries is 20,000 per year per member of staff. A team supervisor will also be employed at a cost of 35,000 per year. Each member of staff and the supervisor require computer terminal which is leased at a cost of 200 per terminal per year. The manager of the LGO that deals with property tax has asked you to help with the budget for inquiries from taxpayers using activity-based budgeting. They are asking the cost of one inquiry. Shall we find the total cost and then divide? What's the total cost? The driver of this is the number of inquiries, which is 28,800. There are 15 staff who handle inquiries. Staff cost for dealing with such inquiries is $20,000 per year per member. So staff cost is how much? Dollars per year per member. How many staff are there? A team supervisor is also employed at a cost of 35,000 per year. Only one supervisor, no? Each member of staff and the supervisor require computer terminal. Each member of staff and the supervisor, that means 16 people altogether, requires a computer terminal which is leased at a cost of $200 per terminal per year. So terminal lease will be, they will need 16, no? Each needs one. 200 per terminal per year. So what's the total cost? What? You have to divide this by how many inquiries? 28,800 inquiries. So what's the cost per inquiry? To the nearest dollar. That means 12, no? Correct. Be careful now. If we put 11.74, it will go wrong. Nearest dollar means we will put 12. Next one. What is the name given to a budget which has been prepared by building on a previous period's budget or actual figures? What? DEFCO has developed some targets to improve the value for money of the services it provides to the LGOs. Match each of DEFCO's targets to the correct element of value for money. Value for money means what? There are three things: economy, efficiency, effectiveness. What is economy? Being cheapest as possible, but does it mean you have to be like the quality should be bad? You have to do what you are doing, whatever you are doing, that correct quality that you want at the lowest possible cost. That's only being economical. The quality that we need at the lowest possible cost. Okay. Then effectiveness meaning what? Sorry, efficiency meaning what? Converting inputs to outputs. With the lowest amount of inputs, we have to try to get maximum output. Effectiveness meaning what? Achieving our final objective. Obtaining a score of 7.7, obtaining a score of 4.7 or above on customer satisfaction surveys. What is that? Cutting departmental expenditure by 5% is what? Out of the three, what is it? Economy, okay. Increasing the number of chargeable hours handled by advisors to 6.2 per day. One advisor is taking 6.2 hours. They are increasing that. What is that? What is that? Okay, then this one, obtaining a score of 5.7 or above for customer satisfaction. Yeah, that's a objective, no? Let me explain that. The first one, customer satisfaction, is objective. So that is final objective, effectiveness. The last one, the number of chargeable hours handled by one advisor. One advisor meaning the input, right? He is taking, he is giving 6.2 hours. So we are talking about the resources, how well we are using our resources. Can you see that? That is effectiveness. Effectiveness, how well are we using our input resources to achieve our output. Can you see that? Okay. Right. Did you understand all of that? What's that? You had sent it out, no? We will look at that only. In the exam kit, what question number is that? 108. What is the answer for it? This one. The demand for product X is 50,000 units at the current price of 1000. Market research has determined that there is a linear relationship between price and demand that can be calculated using the following function. P equals, they have already given us. The variable cost per unit of producing S is 200 and the fixed cost is 20. Variable cost is 200 meaning marginal cost is 200. So first you have to find the optimum quantity by simple here because they have given us the formula no. So it's very easy here. They have given P no already, but we don't use P. What is the optimum point? MR equals MC. MR will be 2 into this. Correct? MC is what? Variable cost. 200. Find the optimum quantity and tell me what is it? It will be 1500 minus 200 divided by 0.02. How much? 65,000. Now what is the optimum price then? We will go to the price equation, correct? How much is it coming to? How much? How much? 850. That's the price. They are asking optimum total profit, no? So first let's get the optimum revenue. Optimum revenue will be what? At 850 we are selling 65,000 units, correct? So optimum revenue will be how much? $850 into, we will take off the zeros. 55,250 million, no? No. If I am taking the million off, I should write it how?
Or else you can just put
55.25 million, correct? Correct, no? From this, I have to, in order to find the profit, I should minus what? Variable cost. Variable cost is 200 into 65,000. How much is variable cost? $13 million, correct? And we should minus the fixed cost. So what's your answer? 22.25. So B is the answer, correct? Okay, understood, right? How to do it? Stop there. Then next week we